Let's see. Hello, hello. Am I live now? Yes, I am. All right, that was the magic button we had to go in and press. Awesome. I hope everybody is here. I hope everybody is excited for these spaces that we have today. We got a live conversation going on in the background. We're going to be talking about the Apple earnings that we have coming up after the close today. Right now, there we go. We're down here. Let's get Earnings Hub back in front of us. There we go. Nice. All right, and then you can see a lot of the companies we have reporting after the close today. We have an Apple, which you should expect the numbers to be released at 4:30 p.m. Eastern, and then a bunch of others that are being watched: a DraftKings, a Coinbase, a Square, a Cloudflare is very popular as well. But this should be a jam-packed day of earnings. I hope you guys are ready for it and excited for it, and yeah. So let me just get everything going. Get the tweets out and the post out and everything, and yeah, this should be a fantastic day. So give me 1 or 2 minutes here, and then we'll break into it. While I am doing that, let me put these spaces in your volume.
Free cash flow margins in the low teens and growing less than 30%. Like that, those three factors alone, like that makes them a nosebleed valuation. Any kind of miss, like if it's not perfect, this thing will go to $70. I think the IV is 15 to 16% on this earnings today. So I wouldn't be surprised if this broke 70 today if it doesn't have a perfect earnings. You saw just this morning, like they're down 40%. I know that they're not competitors; they're the same realm of what kind of product they have. Besides that, Apple again is going to be a big one just for the macro narrative for the markets. Some other names I'm watching as well before I pass it back. Coinbase, I think Logical has been, he's not on here, but he's been pounding the table on Coinbase. A lot of people have been pounding the table on Coinbase, specifically their base wallet feature will start getting reflected in this earnings season, this earnings print. So this one can really fly. Surprised that their IV movement is like low teens. I thought it'd be closer to Cloudflare, where it's 17%, but really it's only 10 to 11%. That's the one name I'm watching. DraftKings is another great one. But yeah, I'll pass back to you. But it's gonna be a crazy afternoon. And guess what? All this price action in the afternoon can be clouded by tomorrow's macro data. So it's just gonna be a wild next 24 hours.
Yes, sir. Big things coming. All right. I'm trying to bring people up, by the way. Some people are glitching out. If you glitched out today and you dropped from the space, don't take it personally. Spaces have been uber glitchy lately, and it's just how it's going. So work with us. Request up.
I'll take that as a speaking directly to me, as it just happened to me.
It's been happening all day to people. So it's just how it goes. Sometimes it takes like 7 times of approving a person. It can be any type of things. But let's keep it rolling here. Well, I've got everyone up on stage, and people seem to be up here. Dimitri,
that is
happy
out.
Thursday. What are you looking at around the world today? A lot going on internally in America right now on the geopolitical side.
Yeah, no, lots of going on. Great to be here, Wolf. Always such a pleasure. If I could, I'd do these spaces more often. Yeah, well, obviously, we all saw the FOMC meeting yesterday. It was great being a part of that. Thanks again for having me on. Basically, it looks like we have a tint of optimism from it based on the market reaction. One of which him saying that even though inflation has been stubborn and moving sideways, it's unlikely the next move is going to be a hike. And he rightfully played down fears of stagflation, which online people were getting a little bit hyperbolic and not really looking at the data properly, taking it out of context, not looking at the historical references that they were drawing from. So, yeah, anyways, so that was really interesting to listen to. As for, the macro level stuff, consumer conference for April came out, went way below expectations. We were expecting, I think, a reading of 104, came in at 97. We got ISM Manufacturing, PMI, Purchasing Managers Index for April. The forecast was 50.1. The actual was 49.2, so in contractionary territory. I'm hesitant to draw any conclusions from that. If we continue to see number prints below 50 gradually, that could indicate something. Typically, when you do have slower economic activity, manufacturing follows, then services, and then you later see that reflected in the composite figures. This Friday we got NFP data. Really looking forward to that. We also have ISM services, which are slightly higher. We're expecting to see a forecast of 52. So interesting to see that. And then some Fed speak. As for the global macro stuff, actually, if you're interested in that kind of stuff, Wolf, I don't know if the Nest works, but I just sent you my latest weekly insight, and I'll just give you like a quick little debrief about it because it kind of pertains to what we're talking about from the macro level. The main idea is that like the macro scale inflation across. Can you guys still hear me? It looks like my mic went off.
Yeah, we got you.
Okay, sorry. Yeah, Spaces has been weird for me as well as my internet. Anyways, so long story short, I think the current geopolitical climate is conducive for inflation because you're seeing supply chains being politicized along the fault lines, essentially, of allies or our adversaries alike. And that has an inflationary byproduct because things get delayed. They're not being optimized necessarily for economic efficiency. First you're doing it to adhere more to strict regulatory protocols to avoid punitive action. That's why you're seeing, I think, for instance, Sequoia a couple of months ago, divorced their operations from China, and I think are even closing it down, right? You see laws like the National Security Law in Hong Kong that was passed a couple of years ago. You're seeing a lot more security take precedent at a time where you're having major changes, like, for instance, the energy transition, which that in itself
mute that away for a second. What's up, Renee, and CT? How you guys doing? I appreciate you joining in on this live stream. I'll ask about the IV and everything and get all that stuff for Apple as we head into the numbers. So definitely I will have you all prepared for that one. 190 calls, a little bit out there, but who knows? Maybe it moves in your direction. We all know that I am a biased Apple bull, so I'm hoping it ends up hitting for all of us. But let's see. Go in your options contract order book, CIV on these contracts if they're way too high. All right. We'll talk about that, though. CT, I got you, and Renee, we'll talk. But let me put the spaces back on.
Growth out of the key economies like the U.S., Eurozone, and China that dictate over 50% of GDP, and of which the other countries are essentially vendors to. Naturally, you could then see that
DraftKings earnings
fundamentals, which amplifies the impact of geopolitical shocks. That could have an impact on monetary policy.
These are a couple of the earnings that you're going to want to be keeping an eye on here today that I'm watching. My handy-dandy earnings hub. Apple, obviously, is the big one. The title of the space is the thing that we're going to be watching the most. You should be expecting those numbers out at 4:30 p.m. Eastern, so we got a little bit of time to wait on that one, so no worries there. But a Mercado Libre, a couple people interested in that one coming out right after the close. We have a Coinbase coming out at 4:05, Square, a Cloudflare, a DraftKings. So we'll dig back into all of them. But on this thing, here's where you kind of want to be looking on what time we're expecting it to be out. Expected numbers. Ooh, that might be last quarter. Ooh, those are last quarter. This is what we want to be looking at. 415, EPS expected to be negative 28 cents. Revenue expected to be 1.12 billion. 430, EPS around $1.50. Revenue of 90.1 billion is what's expected for Apple. Come on, Apple. Let's do it. Let's give me some good numbers, Apple. But welcome to the stream, everybody. Hello. Let's get back to spaces.
Monster company.
Monster beverage as well.
Cap perspective, but it's also I feel like psychologically it's an important company. Even though maybe Nvidia,
that's what it's about. Expecting 190, and then when you look over at the last,
the crown in terms
1.7. So year-over-year growth there, 38 cents, 43 cents year-over-year growth there as well.
Significance. It's kind of got everyone's eyes, whether it's
make sure we all got the water before the spaces.
A lot of people are still married to the idea of Apple, whether they directly own it or indirectly own it. Just given its size and its presence in so many different indices and ETFs, people if someone's long, they probably have some sort of exposure to it, right? And if they're not, it's a name I think that everyone over the last call it 15 years or so has gotten so used to watching everything that Apple does, and when it reports, it's a key report in so many different quarters. So whether some of the other mega caps have sort of taken a little bit of that burden, shouldered some of that burden on their own, Apple's report will be really key. For me personally, I'm interested to see what management's commentary is around China. We're seeing so many Chinese names trade so well right now, whether that's on the ETF basis or if it's like FXI or KWeb. But on the individual stock basis, we're seeing Chinese stocks trade much, much better lately. Alibaba today is a really, really good example of that, with its strong move, multi-month highs, nice volume. So I just want to hear what management's outlook is there. Obviously, we know it's not going to be a blowout quarter by any means, but if management can come out and tell us, hey, worst is behind us, that's, just one more component I think that investors will have to weigh if China's starting to turn. And even branching out from that a bit, Expedia and Booking both report as well. So I just want to get an idea of where consumers are at, what's the travel like, and just try to get a little bit of a more zoomed in picture from those perspectives. And
Freddie, what's up, man? How old do you think I am? I would love to hear your thoughts there. You're not far off in what you're saying there. And then what is the implied move for Apple's earnings today? I'm going to ask someone on the space in a second to get that for you guys. So we'll talk about that in a minute.
I think Chair Powell did a good job of navigating that, as well as navigating the idea that higher rates are off the table right now. There doesn't seem to be any intention from the Fed.
For Apple.
I think that rhetoric started to kind of gain traction in the media and in the press, both from a stagflation standpoint.
Yeah, we'll take that to the side. We got some talk about. I said 24, 27. That is correct. I am 25, CT. 25. Close to 26. But yeah, I would imagine we're going to get a lot of AI from Apple on this earnings call. Definitely one of their words that they're probably wishing that they used more over time. So definitely something that I think that they'll be saying a lot. There was some rumors that came out this morning. Let me get this in front of me. This from WAPO, that Apple CEO Tim Cook is expected to hint at new AI features next week. The good old, hey, we got numbers coming out, maybe won't be that great, so let's talk about something in the future going forward. Kind of similar to what Tesla and Elon Musk did the other day. So let's see if that playbook goes 2 for 2 during this earnings season. I'm for it as an Apple bull, but we shall see. By the way, if you guys are here for the first time, make sure you're subscribing to this YouTube channel. I'm trying to do a lot more of these live streams going forward. This is the worst the quality of this is ever going to be. I'm actually on a dual monitor setup compared to the single one I was a little bit earlier. I'm having trouble getting my mic across from time to time, or my mouse across from time to time, but we're making it work. So this is a lot better. Quality's going to keep going up. We got the spaces here in the background, so you'll definitely be hearing a lot of your regular speakers. If you're coming from Twitter and if you're coming from Instagram, the quality of content that you're about to have going forward is something like you have not seen during these earnings calls, and I am very much looking forward to it. So hang with us. I think this headline will end up being pretty big. I would imagine we're going to get a little bit of hints towards that one. CT, my man, let's go. Appreciate you. That clap might sound horrible. I get excited. I'm looking forward to these Apple earnings coming up after the close. I'm going to make sure to cut in there next time.
Wasn't a close second, and now there's
let's get back on the spaces.
Microsoft is bigger, and Nvidia commands so much attention, and on top of that, Apple's been kind of a dog all year long. I mean, it's
hey, stop talking bad about Apple.
I mean, it'd be great. I mean, imagine what it could do for investor psychology if this name gets it in gear and presses up to new highs. I don't think Apple's a bad company, but the stock has been a dog year to date, and short of this last month, the S&P's been knocking out new highs left and right. So I think it would help if it got it in gear, but it's clearly not necessary for the S&P to go higher.
I do have a quick question. I've gotten asked a couple times, do we know what the implied move is for Apple around the earnings today? I feel like that's an answer Kevin would end up having, or Brendan. Brendan is just a wealth of knowledge, so I think both of them might have it, but I do wonder what the implied move is for Apple heading into these earnings.
I can look at it. It's around 7%, though.
7% feels like a lot. Okay.
Yeah, I mean, if you strip out like a day's worth of premium, maybe 5. I can calculate it for you right now, but
yeah, it's 5.8%.
Yeah. Okay. So yeah, it's kind of do you take out the data because it's one day left? It's kind of apples or oranges, but it doesn't usually move that much.
Look at this
So
guy, Gregory.
if it does move higher or lower more than that amount, then I would be kind of shocked by it.
Kevin, you're my in the past couple conversations we've been having about Apple. You've been on my side. We're not being on the bullish of it, but not as bearish as some of the other speakers up here. So I'm good to keep you just talking all the time and not letting people like Stock Talk, who's a hater, and others talk on here. But how you feeling for these Apple earnings today, and what are you watching in general? How's the market treating you?
Market's treating me well. Look, I think the commentary that we've had is definitely more longer term, right? 5-10 years. Are they going to have some near-term headwinds? For sure, but I'm not counting them out that they're not going to still be a force to be reckoned with over the next 5 years, 10 years. So, I'm looking actually for the stock to actually move to the upside. I don't know if it's going to actually have let's say a 5% move or 7% move, but I think a lot of the disappointments being priced into the stock will obviously get a lot of the data.
7% is a lot.
Being released.
Closer to 6 though.
We're going to have to wait until the conference call because that's when they kind of give their high-level guidance, and then that's when the stock will also move again, kind of similar to what we see for like a Microsoft or like a Google or what have you. So I think that's going to be kind of the case here. But, the China sales, I think the market's already bracing for it. But if they're able to show that their services side, which is a small portion of their overall revenue, but if they're able to show continued growth there and sticky margins at 70 to 72%, I think that's going to be a tailwind. So I'm looking forward to it. I'm not, if it goes to the upside, it moves to the upside pretty significantly. I think that will be a tone shift like Brett was talking about. But if we do see it flat or even slide a little bit, I don't think it's going to really change the overall direction of where the market's at right now. We're just seeing a battle between the bulls and the bears at price levels, and we're having low liquidity. So I think we're going to need more than Apple to correct us, right? If this was NVIDIA, I would say NVIDIA can make that directional change. I don't think Apple has that juice anymore in order to be able to do that, unless we see like a 10% pop in the after hours. I think that would probably change enough sentiment for the market to at least try to press us back to the 20-day and 15-day SMAs on the S&P 500.
It's definitely a short-lived thing that's really kind of come about over this last year or so of Apple not really being the thing that moves the market. For the longest time, everyone would have said without Apple, you are not moving the market, no chance. And it has definitely been proven over the last couple weeks, especially so far this year, that you do not need Apple to move this current market. There are themes that what cares about, and it really is AI right now, and the market doesn't really think that Apple is a part of that AI theme just yet. Now, we've had that discussion on here, and we'll see. There was even a story this morning that Tim Cook might be hinting at some new AI features next week, and I would imagine the reason it's coming out today because we might get an announcement about an announcement about an announcement, that type of thing. We might entering the Apple entering the AI hype cycle, but yeah. So it definitely is a phenomenon, or not normal for Apple to not be relied upon to help move this market. At least this market how it has been over the last 10, 15 years or so.
That's a good thing too, right? I mean, you don't want to have too much concentration in one name or one sector or one industry. Having that broad
quickly, what is up on Unbekannter? Google Nutzer. I hope I didn't just say anything bad, but I appreciate you joining here. CT, you're the man. I have more charisma when I'm talking like behind it. I'm a keyboard warrior, some could say. But there's a reason I'm on Twitter, and I love it so much. And I'm trying to break into YouTube, try to break out my my comfort zone. And Frederick, recognize you from the Discord. Shout out. Appreciate you joining us up here. Been a great person over the last couple weeks, and I'm sure for a long time before that. But yeah, I love that Discord, being able to meet and talk to new people. I did go to college. I studied finance. I went to Ohio State, actually, so shout out to the Buckeyes. And yeah, I do this full-time as a living, social media, reporting on stock market news. And that's part of the thing that I need to continuously jump out of my comfort zone. So we're doing these live streams, trying to do some different stuff, focus in and grow the YouTube channel. Live streaming is where it's at. And I'm trying to get my personality and everything I'm doing and the quality of this up to that point. So I think this is a good first start. And I appreciate you all for hanging out with us. We got about, 35 minutes until the close, and then we should be getting a bunch of the earnings there. Like I was talking about, a DraftKings around 4:15 is when that says, a Cloudflare that says 4:15, and a Coinbase. So we should be getting a bunch of numbers right as we get closer to the market being done for the day. And then Apple earnings 4:30 p.m. Eastern. As always, that's their favorite time. You should be expecting Apple to increase their dividend. As you can see, 4 quarters of 24, 4 of 23. So my head is telling me they're just going to do 25. My heart is telling me the stock's been struggling a little bit. Get me up to 30 cents per share or something. But you should be expecting Apple to increase their dividend this quarter. We are definitely keeping an eye out in that direction. The stock has had a nice little stair-step day there so far. Let's look on the daily chart. Yeah, a little upwards movement on the daily chart, but nothing too crazy. Appreciate you, Frederick. Definitely make sure you're sticking with us as we get closer to the close. But yeah, a couple of the numbers that we're expecting: DraftKings, Cloudflare, Coinbase, Apple a little bit lower. Those are the ones that I'm watching. And then let's get some Square expectations out as well for you guys. Let's put the spaces back on. Monative. I love this guy. Very smart.
And providing solid results and guidance in whatever form that they provide. You've got better protection for the market on the downside, come whatever the macro is, because then you'll have another round of safety trade into mega cap. So I think for that reason alone, Apple is super important. Again, Apple will, at some point in time this year, get the benefit of the PC refresh
40
cycle.
cents same quarter last year.
Really are at a point where you can't run the kind of workloads in any corporate for AI.
82.5% year over year.
With a 3-year-old GPU and CPU cycle, so and memory. So that upgrade is coming. Question is how much farther will it get pushed out? So when that comes, Apple will be a huge beneficiary of that upgrade cycle. And eventually, they are going to find some level of stability in the Chinese market and grow in the other markets that they're trying to substitute it with. So I think Apple has some stories to tell. Personally, I think instead of any hot spend on AI, they're better off quickly signing a deal with Google or OpenAI and make their 4, 5, 6 billion a year with a 20-30% kick or whatever that is. I think they're far better off signing that deal quickly and moving on from there. I was just reading a news quote about they make 20 billion a year from Google on the search deal. So they have the ability to monetize their platform in many ways. So they should do that instead of chasing after spending 10, 15, 20 billion on LLM models and other things, which they have to, but I don't think that is going to bear immediate fruit. I think making a deal with one of these and squeezing as much as they can out of for their premium customers is the
if
best
you had
way
invested $10,000 into Peloton at the top,
to be announced today.
You currently have
$184.
$184.
I doubt it very much. So we'll look for that announcement in the coming weeks and months. That's Apple. What else is there? There is news that Glencore is looking to make a bid for Anglo American. That was a $39 billion deal from BHP Billiton that they rejected. So that's a sign that...
Yeah, Thomas, these are on, the spaces are on Twitter, on X. If you're from Instagram, just follow my page on Twitter. It's StockMKTNewz, same username, and I'm live in there every single day with some of the best traders and investors that I know, and always sharing some knowledge. So, yeah, this is part of my Stocks on Spaces show that I do every single day, co-host with Wolf and Stock Talk, and we get people like Kevin and Jaguar and Shai and Monative and so many others and Dimitri. We got Brett up here too, who just adds so much in and so much knowledge. So, yep, Twitter. I call it too Twitter CT. That's what it is. It is what it is. All right.
Manu, do you think Paycom's earnings yesterday was a precursor to Bill's?
Look at some of
earnings
these
today?
Apple stats.
I don't know. I think Bill's problem are more specific to them, and I think they've had some significant missteps.
EPS.
And I don't know if even one quarter beat outside of a really significant, guide.
Again, they do track pretty closely. I mean, you would expect it. Let's go to
I'm
the
not
EPS.
sure that Paycom is
Free
enough
cash
of
flow quarterly.
precursor to them, because I think
Pretty
there's
strong
some
numbers.
internal factors there that I don't know about. It just doesn't. Nothing else explains how weak they are.
EPS.
Sounds good. Okay.
For Apple, this
Wanted
is
to make
one of
sure
the
we
ones that I
get
love to
the
look
voices.
at.
Brendan, you got thoughts here around earnings and maybe
How many
some
companies are doing
thoughts on
$100 billion
FOMC?
of free cash flow? Come on. Come on. He's just so choked up by how much he's hopeful for these Apple earnings.
I'm sure that's it. Andrew, you want to kick any thoughts into the mix?
Hey guys, overall, I thought FOMC was pretty good yesterday. I think it's exactly kind of what the market kind of needed to hear. Knowing that no hike is coming, I think that really helps a lot. There's still, I think, over 50% of people expecting, 2 cuts this year. So it's good to see. I think we'll probably get the first one. I think I saw around November. That's kind of what everyone's thinking. And it's great to hear that the Fed come out and say it doesn't matter what's happening politically, they're either going to do what they're going to have to do.
Come on,
overall for
Fed
Apple,
Watch.
I think they have a chance to excite some people if they could say the right things. I
Yeah,
really think the
it has
calls
moved
really
a little
going
bit
to
more
dictate,
price than
where the stock's going to go. If they could just have a little beat in a few key areas, I think that the stock could jump up because, again, it's been beaten so much. Over the past year, I think it's up 1%, and it's up 2% today. So pretty good return if you bought it yesterday. So I'm really excited to kind of hear what they say. And I think the really bullish case for Apple is they missed, as we spoke about yesterday, they missed on a lot of key things or incremental increase that they could have done. But they're in such a powerful position because who they are and the money they have that they can really go into any industry they want. So, Monative, you mentioned kind of the LLMs. I think that's a good idea in terms of partnering with someone like that. I think that type of move could push the price a lot higher. Even just the sentiment higher, that they understand when, so something else you spoke about yesterday is when you're behind, how do you make that change? Like Meta did, doubling down on their core business. So maybe Apple does something similar where, they go to the experts, get some good money flow in, and really kind of see what happens. But overall, I think this is a big quarter for Apple. It's setting themselves up for the next kind of, 2024, seeing what they could do. But maybe this is where they start getting back into the conversation of, moving the market as they used to. But let's see. This is going to be Tim Cook. We're all ears. So let's see what he says.
Evan, what's one thing you think Tim Cook is not going to say?
There we go. Okay. What's one word I think Tim Cook will 100% not say today?
Engagement.
Stock Talk Weekly. That's definitely not going to happen. He's a loser. He won't say Mavericks because they suck. No, in all seriousness.
He won't say 2 fewer days in the quarter.
How do you guys say the Mavericks suck after last night, Evan?
Doesn't matter. How are the Knicks playing at 9 p.m. tonight? Different discussion. I don't think he's going to say metaverse. I don't think he's going to... When he's talking about AI and all that stuff, they were using machine learning a lot. And I think they're going to transfer that language over to AI. So I would say that would be a big change from an Apple earnings call a year ago to today. I think you would have heard stuff like machine learning a lot more than you're going to be hearing it right now. I go back to this Bernstein note that a couple days ago of really is the China question of, is this a cyclical pullback or is this a structural pullback? And I don't think we're going to learn that from this earnings today. So I think that the China part of the Apple story is probably a little bit bigger than just Apple itself. But I think that's one that no matter what, we're going to leave this call still asking questions. And I think that is a very important one. So I think that's the direction that will be interesting. But I just want to see a couple things. I want to see... Okay, actually, I'll pull back here because you asked one specific question. And then we'll talk more about specifically what we want for Apple. By the way, the numbers should be out at 4:30 p.m. Eastern. And all the other ones, the Coinbase, the DraftKings, the Cloudflare, the Square, they should be around 4:05, 4:10, 4:15. So we'll have plenty of time to talk about those. But I'm excited for these Apple earnings. I think there's a lot of questions that need to be answered. I think that there's a lot of stuff that won't get answered today, and I think that we have to look at everything through the lens of a company that has underperformed the S&P 500 by 15%, 20% so far this year, and I think that lowers the bar significantly. So I'm excited for these Apple earnings. I think the bar is pretty low, and the people think that people are ready to count Apple out of this AI race. The truth is, if AI is a real thing, we're still in the first half of inning 1. So it's impossible to lose the game then. You can only really lose in the 8th, 9th. There's always chance. But Apple might be down 1-0 as we just got past the first half of the first inning, talking for a baseball reference. In basketball, maybe they went out to a 6-0 lead. But basketball's a game of runs, as we've learned. So I think it's still early. I'm hoping that just anything positive in the AI direction for Apple is enough to start getting people to ask the question. And I think once you start asking the question, Apple's a stock that might be market performing as opposed to down 10-15%, which gives a little bit of a headwards wind. Also, Apple is my largest holding, so I totally could be coping with the fact that it's down 10% so far this year. And that I would put into any equation we're talking about my sentiment. But I'm excited. I'm hopeful. And if Apple's up 10% after this, I'm going to laugh and dance in Stock Talk's face because he is a hater and a non-believer.
Okay, look, to ease some of Evan's concerns here, I'll put a little bit of a positive spin on the things that could be positive. So, first of all, we saw what happened with Tesla post-earnings. Tesla was brutalized year to date, and sorry, I didn't see Dimitri's hand up. Dimitri, go for it if you want to jump in.
Yeah. Just actually had a quick question about Apple. You mentioned China, so I know that they were looking to move some of their operations out of China and potentially Vietnam. I haven't looked at Apple as a company individually.
They did move. They moved one of their AirPod factories to Vietnam. That was last year.
Okay, got it. Yeah, no, that part I would find very, very interesting. But yeah, anyways, I'll let you get back to your main point. I was just curious about
I'm getting an error saying YouTube is not receiving enough video to maintain the stream quality. Has it been solid? Has the quality been okay? Have you been able to hear everything? Please let me know. And let's get back to listening.
Yeah, I mean, not only other Southeast Asian countries, but India as well. I mean, they've increased iPhone production exposure in India too, which I think they'll probably continue to do. On the last call, they talked about, Tim Cook pretty much specifically talked about how they expect to continue to expand capacity in India. Same thing with a lot of other American tech companies. Like Google is now ramping their exposure to India as well. They're hiring more employees there, building another office there too. So
I saw Google had that meeting recently, or that layoff where they're having a bunch of people laid off of their core team and they're moving it to India, which, I mean, makes a lot of sense. They're a better alternative to China, more aligned with the U.S. It makes a lot more geopolitical sense. They're supposed to be the biggest economy by 2075, potentially, given their demographic outlook. So, yeah, it makes total sense.
You guys want to see your random subtle flex? We got a little Mike Tannenbaum follow. Shout out to my Jets.
Okay, so yeah, no, happy to have you jump in if you have a comment. But yeah, I mean, the idea of de-risking China exposure has been a very, very real theme with most U.S. tech companies. But look, when it comes to Apple, I know we've had a lot of conversation about the forward-looking potential, and Evan's been kind of disappointed about some of my negative comments about that. But purely from a stock standpoint, I mean, the stock has a good setup. The stock is flat over the past 1 year. The 1 year return.
Stock has a good setup. That's money in my ears.
Somebody can correct me if I'm wrong, but it's something like that. I think it's maybe at 1%.
Stock Talk. The last time that they were in that similar scenario where they were up about 1%, and everyone was considering them degrowth in the sense where innovation was no longer where they were going to see amplified growth. You were at a period where Tim Cook was taking over the company, and there was ample and accurate, rightly so, fears that there weren't going to be the next leg of innovation at Apple then, right? Now Steve Jobs is gone. Let's just keep in mind that from that point forward, that 10-year cycle forward turned a $300 billion company into a $3 trillion company, right?
Oh, yeah,
a 10x from there. There are other ways, right, and things that you don't necessarily see, that the growth may feel like it's like the innovation right now is sort of stumbling, or what are we going to do next? But sometimes it's just putting an operator, and the world's greatest operator, in charge of a business, right? Like simple things like that allow for operational and excellence that keeps the business just unable to be dethroned, right? In the event that it stays even close to the others in any area or business sector. So I just see, I hear your point about that. I just remember the last
about
time
20 minutes until the close.
Reiterating that point. I was just saying I made that point earlier, but the point I'm making now is not that point. The point I'm making now is that the stock is flat over the past 1 year, and that it's down 10% year to date, and the setup's decent. I mean, it's not a stock that has a ton of expectations baked in going into this report. So, look, the concerns I have about their innovative profile and product suite, I remain concerned about that. At the same time, those concerns could be instantly resolved if Apple made
It's
what I
near
think
50
are
to be
significant
closed, not
product
at 50
announcements
to
in
be
the space.
closed.
Now, we can speculate ad nauseum about whether or not they're working on that or what's under the hood or what's not under the hood. I don't know. I'm not an internal insider at Apple. I can't tell you what is or isn't happening under the hood. But my opinion on Apple's innovation trend could easily change in the snap of a finger.
So, if I hear it right, it's like you're in that position of when it was happening originally, like in the Jobs time. It was like, I hear and see this could be a concern now, right? And I'm concerned if they don't do anything. But there's some things that they could do that could turn my mind around and make me a believer here. But I would need to see those to happen, right? That's kind of where I'm at.
Yeah, at this juncture, I prefer other megatech stocks, but that could change if Apple made meaningful announcements that I think are relevant to this upcoming product wave. But
come on, Apple. Now is the time. Let's do it.
It could be this call. Who knows? But anyway, putting the Apple talk aside, because we're going to talk plenty about that after hours, just from the market perspective, I talked a lot yesterday about the 10-year yield. And I talked about how there are moments in the market, sometimes it's 3-week periods, sometimes it's 2-month-long periods, sometimes it's 6-month-long periods, where equities are really dependent. The signal is really dependent on the signal that bond markets are giving. And I've been tweeting about the 10-year, talking about it here every year, and today was a textbook example, again, of the 10-year being used as signal for equities. In pre-market, we were up on every major index. We were moving up on every major index. We're up like 0.5% on the Qs. And then literally the moment the market opened, what happened? All of that equity move got flushed. Why? Because the 10-year had not budged. So in spite of that pre-market gap up, we had not seen any relief in the 10-year this morning.
The expected move for Apple is 5-6%.
A reason to
7% if you include like the normal volatility, but it's closer to like 5.8%. Shout out Monte for answering that.
And the moment
what's
the
up, user groups?
Went red on the day, from green to red on the day, what happened? SPY and QQQ catapulted to new highs on the day. So equity markets are telling you in your face exactly what they need to go higher, which is relief in the 10-year. And today we're probably going to close down about, a basis point and a half on the 10-year. That's not a huge move. We're going to close like 4.57. But if this trend continues and we start to see relief downwards, close 4.5, below 4.5, then this equity rally can certainly have legs. But what I've been pounding the table on, and I continue to pound the table on, is if you're a trader, especially, you should have the 10-year pulled up on your screens with the rest of your charts, and you should be using that as a barometer for sentiment for if equities can trend higher, not only intraday, but in general. And so that played out to the book today in terms of the 10-year action. And for people that think that that's reactive and not signal, you're wrong. If you look yesterday at the move in yields, that move in yields was 15 minutes before the move in equity. So it is signal. It's not just like, the 10 years.
User groups coming from the Discord. Love it. Let's go. What's up? Say hi to me in the Discord so I know it's you.
That gets more intense at certain phases in the cycle. And we're at the point in the cycle right now where there's so much uncertainty around the rate path that equities are taking their signal from the bond markets of whether or not they can trend higher. So that continues to be something to keep in mind. I'll quickly touch on the 2 stock picks we made this morning because I know we're going to be focusing on earnings for most of this conversation. But we made 2 sell-side picks this morning. The market obviously helped push these higher, but they both broadly outperformed all of their peers. The first was a stock that probably most people...
There we go, user groups. I see you in that Discord room. I appreciate you.
Bread Financial.
Oh, Mr.
So this is about a
Cam.
$2
What's up,
billion
Mr. Crypto? What up,
payment
mate?
and lending company. And they had a note this morning from Keith Briette, who I've talked about a lot. I try to kind of break down for you guys who I prefer on the sell side and who I don't. And Keith Briette's a shop that is very good. They do real research. They don't do reactive bullshit or just follow a trend. And they're especially good at financials. And so whenever we see Keith Briette commenting on financials, I almost always pay attention. And this morning they had a nice report on
Trey,
names.
send me a
We chose
DM on
BFA.
whatever platform you're on, either Instagram or Twitter, and I'll send it your way. Let me know your Trey from the live stream, and I'll get you that link to join the Discord. But yeah, free room. Just enjoy chatting with the people, community, get to know different people's YouTube channels and stuff like that, and it just adds so much. Shout out Frederick, who was on here a little bit before, active member of the Discord, helping me out. But yeah, free room. Send me a DM on whatever platform you're on, and I'll get you added to it.
And so
We're still just waiting for these earnings.
Sell side selections for today. The stock is up about 7.5% into the close. So it's just a monster mover intraday, especially for a financial name. But the commentary they made is pretty straightforward here. I'll just read the excerpt that I put on our in our community here. They say we are upgrading the private label card issuers, Synchrony and Bread Financial, to outperform from market perform, as we believe much of the uncertainty related to the late fee regulation is diminishing. For those of you that remember, there was a bunch of uncertainty around these stocks when the late fee regulation news started coming out. They say the uncertainty around late fee regulation is diminishing, along with recent positive developments on the court front. When we incorporate conservative assumptions,
Trey. I'll make sure not to look at it on the stream.
Upside potential
Appreciate
for
you, man.
levels for these stocks, and we believe they compensate investors enough for the associated risks. The BFH price target they put on is $67. The stock was trading $39 this morning. Keith Briette is not the type of shop that does this. They are not the type of shop that goes in and implies 70-80% upside on a financial name. And so that's why we thought this was significant. That's why
these
we
are the
picked it
names
this
we're
morning,
watching.
and it worked out
Apple,
very, very well. I mean,
Monster,
whether
Mercado
you entered
Libre,
in pre-market or at the
Coinbase.
open, I mean, there's no way that this could have been a losing trade for you. The stock has done nothing but trend up for most of the session and is going to close
I'll be
probably
back
up
in a
about
second.
8%.
Listen to
The second pick we made was from Stifel, which is interesting because Keith Briette is actually a sub shop of Stifel. But anyway, Stifel had a report this morning on TTMI. Now, this was a little bit more detailed, so I'll read this a little excerpt briefly. They say, we upgrade our investment rating on TTM Technologies and increase our 12-month price target to 19 following a solid Q1 report and increasing optimism on the growth drivers over the next few quarters, including growing backlog in aerospace and dispense, which makes up 46% of sales, double-digit growth in data center due to AI demand. TTMI expects margins to improve this year despite a more than 100 basis point GM headwind due to the ramping of a new factory in Malaysia. 0.7x of our full fiscal year 2025 EPS estimate of 170, which we believe does not accurately reflect the significant and positive changes made at the company. So TTMI traded significantly higher today off that report, traded off 14% off the open, and is probably going to close up about 12%.
Greece from France.
Again, there are hundreds of sell-side reports every
hope you're doing
single
well.
morning. Literally.
Hope you're excited for these Apple earnings as I am. Again, expect the numbers to be out for Apple at 4:30 p.m. Eastern, so we have a little bit of time on these Apple numbers. We're going to get a lot of the other ones, like we've been talking about. Coinbase should be a big one. I'm sure you DGens care about Coinbase. What earnings are you guys in the chat watching here? Like I said, these are the 4 that I'm probably going to be covering outside of Apple, but if there's another one that you guys want me to keep on my radar, I will make sure to do that.
So that's been really, really solid. Moving on to the earnings reports from today, I think there's going to be a lot of read-through on most of these names. I think today is probably the biggest read-through day of the season. You have Coinbase, which is reporting, like Evan said, about 5 minutes after the close. There's going to be read-through to that name for pretty much the entire crypto sector. Most of the other exchange-related names as well. You have DraftKings, which is going to have some read-through to the online gambling sector. We had a pretty strong report last night from one of the mid-caps in this space, Rush Street Interactive, which we talked about briefly. I talked about briefly with Evan yesterday later in our session, but Rush Street Interactive is up about 20% today off that report. And they had some nice price target increases this morning as well. I don't know if that's directly overlappable with DraftKings report. I think DraftKings is a little bit more of an umbrella
Apple
purview over the
DKNG
industry.
net. I agree.
I think their input
I
is
agree,
probably
Trey.
a little bit more significant, but that is something to note going into the DraftKings report, that you had a very positive reaction from Rush Street. You also have Fortinet and Cloudflare, which obviously have industry-wide read-through tonight. And another handful of names you have are Booking and Expedia tonight, which will have some read-through to the airlines, which have been performing actually very well.
Floor and Decker.
In spite of the pullback in cruise that
I'll
we
add
saw yesterday with the
STNT to my radar
NCLH
as
dump.
well for you.
Airlines have
Let's
been
get
doing
that
well.
on
I've been
here.
in Delta calls for a while. I'm up about 67% on those. I've only been in those for about 2 weeks. And Delta's up another 2% today, as are most of the airline names. So airlines are showing a little bit of relative strength versus their other travel peers, especially versus cruise lines. That's an interesting dynamic to watch going into these bookings companies' reports, because they will have an effect on airlines tomorrow, I imagine, whether they're positive or negative. So there's going to be a ton of read-throughs today. Oh, also GoDaddy, which has read-through to the other website-related names like Wix and Squarespace. So yeah, there's going to be a lot of potential sympathy trades for the traders out there to be made tomorrow in reaction to the set of earnings today after hours. So it should be a fun set of earnings for us to cover here.
All right, we got about 9 minutes to the close now. So we are going to shift a little bit more into some direct earnings talk. The big one for the day is Apple, which we should be expecting to be out around 4:30 p.m. Eastern. So we have a little bit more time to sit and wait on that one. But a lot of the other ones we'll be getting that I'm sure a lot of you will be caring about is Coinbase and Square and DraftKings and Cloudflare and Mercado Libre and Fortinet. So a lot of names on the radar of the people that we're talking about here. Coinbase should be out. Coinbase and Cloudflare should be out at 4:15 p.m. Eastern. We should be having Mercado Libre at 4:10, and then Square and Fortinet at 4:05. Bookings and Expedia also reports earnings, so a good indication for the travel sector. We have Amgen reporting earnings. Maybe some medical areas being impacted, and then we have Monster, USCO, Live Nation. Just a plethora of companies reporting earnings here after the close, and as Stock Talk was saying, a lot of these names are going to impact different parts of the market, so we should be getting a lot of really great read-throughs here. I'm specifically looking for this Apple one, my largest holding, but Coinbase, Square, DraftKings, Cloudflare, some very popular ones. Logical, you got any earnings-specific thoughts as we're heading into the close here?
Absolutely. I'm along two names. Mercado Libre is a decent position, maybe 5%, but it's coming off a very big dip for a very quality name. So I'm just looking for continued
Apple
excellence in that company. But my largest right now going into earnings, and it is like almost a pure earnings play, and
here is
extremely large position, is Coinbase.
151 revenue, 90.6 billion. Apple should be increasing their dividend. Keep an eye out for that one.
Just because
Let me get that away. Apple should be increasing their dividend. Definitely keep an eye in that direction. The two stories we're going to be asking ourselves, I think, after this Apple earnings call, 3 maybe, is first AI. AI is going to be everything here. What's happening with Apple AI? I think that's kind of the area they've been put out on, and we'll see how that happens. The China story. China numbers are expected to come in down, but how down? Is this a cyclical story where expect to see some recovery over the next little bit, or is this more of a structural story where the Chinese consumer doesn't want iPhones like they did a couple of years ago, and that would be a little bit more worrying. And then the final thing I'm watching for is the Vision Pro discussions. Wall Street does not care at all about the Vision Pro. It's probably giving this a 0 right now, similar to Meta's Reality Labs. But what I do find interesting for it is any talk of how much CapEx they're spending in that arena, how that is taken by Wall Street, because it was not taken well for Meta. Increased CapEx for AI has been taken pretty strongly from companies like Amazon and Microsoft, who were able to move higher after earnings. So that's definitely where my focus is on that direction. But let's get this back here.
Strong all day. I noticed a lot of open interest on the calls across various.
We got about 700 people on that Spaces right now waiting for us.
And yeah, I mean, again, transaction volume.
Here we go.
Among retail traders.
5 minutes until the close. 5 minutes until the close.
For in a lot of these estimates. They should be talking about smart wallets that should release soon, which should give them a piece of the pie as it comes to transacting on chain via the decentralized exchanges. And yeah, I mean, subscription revenues with Coinbase One there's just a lot of things.
Awesome.
Like I think this should be a very solid earnings. I'm definitely very anxious given my size, but
And if you're just here for the first time, make sure you subscribe to the channel. Doing a lot more of these things going forward. All right, let's talk back into the spaces. Awesome. Appreciate those thoughts there, Logical. Mr. Shy, I would love to bring you into the conversation. A couple of these names I've heard you talk about a bunch, a Cloudflare, a Mercado Libre, a Fortinet, etc. If you have any thoughts on Coinbase, Square, DraftKings, I know there's a lot of interest around those. But Shy, you have any thoughts you want to add into the conversation and what you're watching for on these couple earnings we have after the close? Which one's biggest on your radar right now?
Yeah, so my biggest position that's reporting today is Mercado Libre. So definitely Melly. Again, my biggest worry is FX headwinds, specifically Argentina for Melly. I'm praying for a stock split. Been doing that for years. We'll see if we get it. Last earnings was a really surprising gap down on their print due to some tax noise. Want to see them go back to what they usually do, which is just absolutely destroy their earnings. So I do believe Melly belongs over 2,000. So we'll see if this is a catalyst it needs.
You guys are about to see how I get set up for
Cloudflare.
earnings.
Again, I've been very open. Like, I own Cloudflare. Is an absolute necessity in any modern tech stack. However, it's the most nosebleed valuation on all growth tech. Any kind of hiccup on this print, this will go down 20% with a blink of an eye. Like, this will break 70. It belongs in the 60s. I've been very open about it. So we'll see if it continues like their impressive earnings the past couple quarters. But any slip up, like even a hiccup, this will bleed down 20%. DraftKings, I don't have a pulse on DraftKings. I've always thought that they have no pricing power in their business model, and I just didn't really see the long-term moats. I've been proven wrong. Maybe maybe they're doing a great job in the early stages. We'll see where they are at on that. Coinbase, I do think what Logical is saying, this is a name that I think a lot of people have been front-loading on this anticipated earnings beats. I'm looking at the analyst expectations. It's surprisingly light. So in anything that will be surprising on the upside, this thing could move to 300 real quick. But again, next 7 days is massive for growth tech. Today is the first kind of glimpse of a couple names that are going to be showing how the environment is going to be for that kind of space. Apple reporting will be a great sentiment on consumer spending, or regardless, any kind of consumer-related impulse. But I'll pass back to you. But again, I'm watching. There's just so many names that the next 10 or 15 minutes, I'm just going to be reading, and just digesting. And I have some limits in place for Mercado Libre, and also, what was the other one? Yeah, so I have some limits in place in Mercado Libre. I would love to
Come on, computer, stop being slow.
If there's any kind of weird algo-driven gap down due to, again, FX headwinds is the reason they missed. Who knows if that's the case, but I'm going to be prepared and watching for any kind of commentary on Cloudflare for usage-based, because they're the first usage-based model in growth tech world that's reporting this earnings season, so I'm going to be watching for any kind of color on their call.
Looking forward to it. Should be a very interesting earnings. 2 minutes into the close here when we should be starting to get these numbers out. And, of course, my computer is being slow and stopping working. Great timing, guys. Great timing, Apple. But at least we got till 4:30 till those numbers come out. Kevin, I don't want to blabber too much. I know you tend to have something you got to do at the top of the hour, that nice hit. But you have any thoughts last second before we get to these earnings? No worries. If not, Monative, same question over to you on any of these names. Besides Apple, a lot of these names we're about to be getting right here if you're watching any of them. Any last thoughts you want to get in?
No, let's just wait for the numbers.
Gurgavin says he's in, but I don't see him up here. Maybe he's just lying to the squad.
On his burner.
He's in the space. He's just a listener.
We'll see. All right, we got about 1 minute to the close here. Keeping an eye out for all of these numbers. Booking and Expedia might be coming right here at the close. There's just too many tech names and all that stuff coming out, so keep an eye out on everything. Let's talk. Gerg, we invited you up here if you want to help. I just removed Gerg from the spaces. Oh, well, it is what it is. Let me send him a private DM, but give it a second.
Pissed that you did that.
1 second. Yeah, you guys take it for a second. or not?
Sorry, just pulling some people up.
All right, market is closed. Let's keep an eye out for a lot of these numbers that we got coming out. Come on, come on. My computer's done being frozen. Ooh, is that no, that is not a gurgler joining us up here. Oh, well. Should be expecting these numbers coming out flying any minute here. Stay with us. We'll try and read the numbers out as quickly as we can. And yeah, all right. Some stuff is starting to cross a tiny bit here, but nothing really. Well, if you want to keep us going for a little bit while I try and get all the numbers in front of me.
Yeah, I see we got Jason up here too. Jason, and he dropped. Never mind.
I'm here.
Two Jasons. Okay, there were two Jasons that joined up. Jason, we're about to talk Apple earnings here.
Nah, all the other ones. Apple comes at 4:30 p.m. Eastern. Keep an eye out for that one. We have a lot of other companies that are about to be reporting earnings right now. So Coinbase should be out any minute now. Bookings and Expedia should be out any minute now. Big tell-to for the travel sector. We have Amgen and Expedia that their earnings just released. I'll try and get those numbers in front of me. But yeah.
Out, it says 1% dip in first quarter profit and revenue up 22%.
Yeah, what's that initial Amgen move?
7.45 billion.
Yeah.
There's Gerg.
Yeah, what's up?
What's up, Gerg?
Just woke up. I mean, I've been lying all the in my bed. Just came back last night, so.
Well, let's hope you're feeling okay. We got just so many earnings coming out. Square will be one we're watching.
Square is usually 4.5, Coinbase 4.15, Apple 4.20, 4.30, like always. Those three are the ones I'm watching.
Booking is a massive beat. It made $20 versus $14 estimate.
Ooh,
Revenue
that downwick in Amgen.
Billion.
Well,
Amgen was a beat on EPS, 396. Market wanted 394.
Ooh, big move up there. Yeah, read out some of the numbers. What were you saying there on bookings? I interrupted you.
The bookings outcome revenue of 4.42 billion, estimate of 4.25, up 17% year over year. For EPS, let's see.
EPS $20.39 versus $14.10 estimate. It's up 4%, 3%.
Amgen, I'm seeing EPS was $3.96, beating expectations of $3.87. Revenue of $7.447 billion. Wall Street wanted $7.43 billion for Amgen. And that was
Expedia is out. Weight Watchers, if anyone cares about them. There's so many earnings right now.
Yeah, it's a lot of companies we got coming here. Booking with a nice move up. Expedia Group.
Coinbase says some users may be experiencing delays.
Who cares? We got earnings coming up.
Yeah, 15 minutes.
Yeah, Coinbase should be a little bit later
so
on.
Booking and Expedia are really responding positively. Expedia's up 6%. Bookings up about 3.5%.
I'm seeing for Expedia the numbers I have of negative 21 cents for EPS, being expectations of negative 24 cents, and then revenue of 2.9 billion, being expectations of 2.8 billion. Amgen, the forward EPS estimate was kind of more or less in line with expectations, slightly above.
I'm surprised more people don't own Expedia.
Me too, especially with the management being the teams that were led by like Dar Khosrowshahi.
Not even the team. I'm talking about last earnings. They announced a buyback. The buyback was $13 billion.
Are you saying overbooking or just owning it in general?
Coinbase earnings are out, by the way. Total revenue. Coinbase total revenue is 1.6 billion. Wall Street wanted 1.3 billion. Maybe they wanted adjusted. That might be a different number. That's quite a huge beat for Coinbase on revenue if that is the case.
It is, and all these retail traders on Twitter they had their own calculators, and they were estimating 1.6 plus.
1.6 billion is what I'm seeing on Coinbase. Let me try and get the EPS in front of me. Gerg, you have anything there?
Yeah, remember it did most of the expected move already during the session.
Booking, Jesus, EPS $20.40.
Huge EPS beat on Coinbase.
What is it?
440 versus 104.
Yeah,
That's what I see. Come on, man. This shit should be way higher. God, I called that.
Ooh, Coinbase moving lower off of that. There must be something else in here. I'm waiting to get all the numbers in front of me. Monster Beverage, EPS of 42 cents, missed our expectations of 43 cents. Revenue was in line with expectations at 1.9 billion. Coinbase revenue 1.64 being expectations of 1.32 billion. C subscription revenue, I don't have the expectation there, so that's a little bit of a useless number. All right, waiting. Come on, Coinbase. I still don't see the EPS necessarily just yet, but I trust the stock talk.
I'm not getting those numbers for myself. I just saw them.
Coinbase is 440. Market wanted $1 something, so it's a big beat.
Is there no?
Nelly's out. Nelly's out. The stock is up 4.5%. I don't have the details yet, but 344 million profit versus 314 expected. 4.3 billion revenue versus 3.9.
Do you have the expected subscription revenues for Coin, Evan? That might be where the miss is. I don't know.
No, I just have the guidance for next quarter.
Is that guide a beat or a miss?
It doesn't have what it was expected to be.
Okay, yeah. I only have the headline expectations on Coinbase as well, so whatever.
Yeah, crypto is saying, remember with the first quarter for Bitcoin for Coinbase, the Bitcoin ETF with Coinbase acting as a custodian. Fortinet, ticker FTNT, EPS was 43 cents, beating expectations of 38 cents, and then revenue of 1.4 billion, beating expectations of 1.33. Like it's more or less in line with revenue. Fortinet first
Do we have
move down.
DraftKings yet?
No, we do not have DraftKings yet. DraftKings should be out at 4:25 is what my thing says.
Okay, so right before Apple.
Yeah, so basically we're not going to care about it. Love you, DraftKings, but you're not not
Okay.
quite Apple. Sorry.
Well, I mean, yeah, I just think it's a popular retail stock.
Don't you dare try and put anything down on my Apple.
I'm not putting anything down on Apple.
I don't know. I heard it. I heard it in your tone there a little bit.
Calm down, Tim Cook Jr. It's okay.
Tim Cook is my dad. To be fair, if that was the case, I don't know what I would be doing right now. I'd probably be doing Gergavin stuff, just filming myself eating crazy breakfasts and then just going sitting in my bed after and doing nothing. What was that? Ooh, Fortinet's getting hammered pretty aggressively here. Fortinet's down around that 60 mark.
Coinbase back to flat.
Is DraftKings out? No, I'm not seeing DraftKings out just yet. Sorry, someone else asked about it. I know you just did.
Bill.com, again, another bad one.
Not only on
Bill is down 15%. Sorry.
No, you're okay. I'm saying not only a reversal on Coinbase, but big reversal on Expedia too, which is down 5% now. It was up 6, it's down 5 now. Booking's up 9 now. Wow. Booking.com just went from 3,450 to 3,800.
Yeah, that's quite the wick to the upside for Booking for Expedia. Sorry, Booking is coming back a little bit though. Davita EPS beat, revenue beat. Coterra Energy EPS beat. Digital Realty EPS FFO same thing beat. I know it's not, but close enough. Revenue missed over there. Illumina was a beat, EPS of 9 cents, beating expectations of 4 cents, revenue of 1.1 billion, beating expectations of revenue of 1. It was really 1.06 billion, beating expectations of 1.05 billion. I thought I could round up, but apparently not. So we shall see. We should be getting Square earnings out. Actually, Square earnings should have been out. Haven't seen them yet. Of the ones I was really focusing on.
We're supposed to be 5 minutes after the bell, right?
Yeah, Square was supposed to be out already. Maybe they're doing some stuff. Maybe they saw the stock performing actually not terrible. Well, it's actually been a pretty good year for Square so far. So, I don't know. No insights. It is moving lower a little bit, but I don't think there's anything announced yet.
Yo, Spaces sucked today.
Yeah, it's been a thing.
So Coinbase says the SEC has dismissed, no, the court has dismissed the SEC's claims over Coinbase Wallet, whatever it means.
Interesting. Well, I guess less SEC problems is better than more, you know?
I mean, the court has dismissed that, not the SEC, so, you know.
Waiting on these Square
there's something in the Coinbase report that we are not seeing, because I mean the stock is literally flat on an enormous EPS beat and a big revenue beat. So something is there.
The stock was up like 10% to the stock market, right?
Yeah, most of the move was done already today, so they expected more.
Also, based on, I mean, the outlook was what? Let's see.
Square earnings.
Guidance,
Square earnings are out, but it's one of those things where you have to go to the website. Gerg, you should be getting Square numbers trickling on the terminal in like a minute.
For Square, the implied move was 12%. Let's take a look.
Still waiting on Cloudflare as well. But yeah, Square is one of those ones where you have to go to the company's website to see it. So this will trickle out.
Or the next few hours.
Next month. Yeah, that Coinbase one is getting some love. People are definitely asking what's happening here. Why is it down? Yeah, let's take a look back over this coin. Square is moving a little lower, but just because the numbers are out, they haven't been able to be digested yet.
They're not on the way yet, so.
Stock Talk actually just bought a new Motorola phone. Motorola reported EPS of $2.81, being expectations of $2.53. And then revenue of $2.4 billion, being expectations of $2.35 billion. It's a small beat on both top and bottom line for a Motorola.
Okay, I've talked about a new phone. Talked I wanted to buy an iPhone, but he went.
I would never get green text, no matter what. I want green text.
It's a useful device for spaces and nothing else.
What's up, Chris? Shout out. I've always wanted to go to South Africa. Probably will soon.
No, any cheap device that's Android, because it runs fine and you don't heat up and spoil your iPhone.
I don't know what kind of iPhone you're running. My iPhone's fine.
All right, we got about 20 minutes, 19 minutes until these Apple numbers come out.
Melly's up 8% now.
I have not quite seen the numbers for Melly get in front of me yet.
I just called those out.
Yeah, Melly beat pretty easily. Beat revenue top line 10%, and they beat the EPS around same thing, 10%. Good beat across the board.
Still nothing for Square on the wire.
All right, so they're taking a nice time on the website. Square is continuing to move lower, though, as we wait for these numbers. It closed the day around 70, and now we're down at 67, 68. But I don't think the market has fully absorbed anything we've gotten yet. And again, if you're just in here, I know I just said it, Apple earnings 4:30 p.m. Eastern is what time those numbers should be out. So stick with us.
Coin dropping now, down 4%.
Ooh, Square with a big reversal candle there. Maybe something just hit the wire. I haven't seen anything for Cloudflare either. Maybe that's a 415 one. Maybe that is a 415 one.
Yeah, you're right. Square's running. Just broke 70.
Yeah, we gotta wait a minute, I guess. Monster missed EPS. We talked about that one. Revenue in line. BJ's Restaurants beat EPS and revenue.
Net usually goes around 415, Evan.
All right, so we got 2 minutes for net. And then you should be seeing anything with Square trickling in a second, as it is continuing to move higher up to like 73 now in after hours. So Square, something on that report was good. Trying to wait to get that in front of me.
Okay, here we go for Square. Square sees, I see guidance before. Okay, let me go back. They have raised their fully adjusted EBITDA guidance to 2.76 billion. Market wanted 2.7. Let's see. Operating income of 1.3 billion before the expected 1.15 to 1.18. Implemented a Bitcoin dollar cost average buy program.
Emperador is saying EPS was 85 cents versus 71, and their revenue was 5.96 billion. What was expected on Square?
So they announced a Bitcoin buying program.
Do you know what that means?
Bitcoin buying program?
Yeah.
It means they're trying to become like MSTR.
Oh. I always want to be MSTR. Blade, it's out at 4:30 is what time Apple is. So keeping an eye out. This Cloudflare number should maybe be hitting. Yeah, I'm seeing EPS 74 cents for Square, beating expectations of 73, and then revenue of 5.95, beating expectations. DraftKings earnings are out, so is Cloudflare. Let me get those in front of me.
So Square expected revenue was 5.816, 5.81.
Yeah, so they beat there. Cloudflare. What do we probably care more about DraftKings. DraftKings revenue was 1.175 billion. Wall Street wanted 1.175 was what they said. Wall Street wanted 1.12, so beat there. Gerg, if you see anything before me, I have to dig in to find EPS.
Oh, what?
DraftKings.
Okay. People care about DraftKings?
I think people care about DraftKings. What's DraftKings' initial move?
DraftKings, EPS, they made a profit, which is okay. So
Big wick.
Adjusted EPS of positive 3 cents. Market expected a loss of 26 cents per share. Revenue came in above estimates. Revenue was $1.18 billion, and market expected 1.12. DraftKings sees full year revenue of $4.9 billion. Before the expected $4.75 billion. The good numbers overall. The stock should be moving higher. Let's see.
Yeah, raising that full year revenue guide should be decent. It had a huge wick down to like 39. Yeah, huge wick. From 42 to 39 is a big wick there, but it came back up to 43.
Nothing happened, you know.
Some places is reporting that EPS is a miss for DraftKings. They said GAAP EPS. I guess GAAP EPS was a miss, but adjusted is what we report. Cloudflare earnings EPS was 16 cents, beating expectations of 13 cents, and then revenue of 378 million, beating expectations of 373 million. So beat on both top and bottom line for Cloudflare. DraftKings up a little bit, had a higher wick, not the craziest of moves. What's Coinbase continue to do? Oh, geez, not what you want to see as the Coinbase bull. Cloudflare
is down 16%.
Damn, okay.
I literally said this before the print. Like, it was a good beat. It wasn't good enough for their valuation. I expect them to be settled in the 70s.
Yeah, Cloudflare was at like, what is this, 89 before the print closing today, 88 maybe, and we're down at 76. Jeez. All right. And now we wait for Apple. DraftKings raises midpoint of revenue guidance. Gerg talked about that one. Some very solid numbers from a couple of these companies. I'm surprised more aren't moving off of it. I guess it just kind of goes to where the stocks have been. DraftKings is near the high of the after-hour session I'm seeing right now, though. All right. Any other earnings we haven't talked about yet that you guys are watching? Let's get Logical back up here.
We talked about Cloudflare. We talked about Fortinet. We talked about Booking.
Interesting. Okay, I'm looking at the letter from Square. 10% of their monthly profits will go towards buying Bitcoin.
Interesting. It's kind of funny that it's actually called Block now. Who calls it that? Come on. What are we doing?
Well, that business is actually still called Square, right? The parent company is Block, I guess. Because there's a Square CEO and a Block CEO.
That is fair. I don't know. I do not know.
Like, I don't go to the machine when I'm paying, and it doesn't say Block on it, right? It says Square.
Yep.
Bitcoin in Square's shareholder letter, Bitcoin is in here 111 times.
So, Shai, I know you're a Mercado Libre guy, but this GMV growth in Brazil and Mexico is wild, huh?
He's up. Oh, now he drops off. Maybe it just was glitching for him where he couldn't speak.
Yeah. Mercado Libre's gross merchandise value growth in Brazil and Mexico was crazy. I think that's part of what's fueling the stock here. And besides just the beat on the headline, they grew 42% in Mexico year over year. That's wild. I mean, for a company of that size, that is wild. And they had crazy year-over-year comps the year before, too. So Mercado Libre continues to be a very well-managed company.
Lockheed Martin's getting a pump right now. Emperador pointing that out. No, it's not actually. I guess that was just an into the market close move. Oh well, we'll look for geopolitical news there. Disregard. He's commenting now too as well. We got Jordan down below. We got AJ. Nice. All right, 10 minutes until these Apple earnings are out. I am excited. Apple will be raising their dividend, so keep an eye out for that one. There's nothing really kind of projected around share buybacks or anything like that, but Apple should be raising their dividend. It's currently 24 cents. Last time they just raised it by 1 cent from 23 to 24. I'm hoping with where the stock is and how everything's been going that we raise it a little bit higher. Maybe 26, maybe 27, maybe 50. No, I'm kidding. It's probably going to be 25. There was a geopolitical headline towards the close. Sean sent my way. Israel strike hits Syrian security building outside Damascus. Last thing he saw. We'll see when that is. Yeah. Kevin, do we got you back? Take that as a no. All right. We got about 9 minutes till these Apple earnings come out. My entire day, how I'm feeling, will be determined in the next 10 minutes.
So if you dig deeper in the Square shareholder letter, it says they have spent $220 million.
Like it used to be an
My bad. I thought I unmuted. Yeah, no, that was me, Frederick. I'm dumb. Oh, sorry. Unmuted here too. I'm live streaming for the first time over here, and there's problems everywhere. But it's been pretty good so far. Sorry, Brendan. Love you. Bye.
Very good. Very good.
All right. What are we watching? I see we got Shy joining us back up here. Hello, Shy.
Boom, I can hear you. Sorry, I wasn't able to hear a couple of listeners had to go hop on. Did you ask me something?
I think Stock Talk was asking about those Mercado Libre numbers, something in there. He might have also just been talking some trash because, he doesn't like Apple, and we don't like people who don't like Apple. But yeah, sorry.
No, Mercado Libre was a clean beat across the board. Like, if you look at their gross merchant volume, the total payment volume, like, EPS, Q1 revenue, like, you couldn't ask for a better beat. Stock's up 6% after hours. I think it's a steady, strong beat. I want to hear some more color on their credit profile, because their credit profile, there was some red flags last earnings of like, it doesn't look the best. I would love, and again, this is just me poking holes in an incredible business that the credit profile is probably the least favored of what Mercado Libre is. But again, why this was such a strong print. Why not just announce a stock split? I'm just like so infuriated about that. But again, strong print. Cloudflare again. I don't know if anyone has spoken on that. It's just that was a really good print. Just high valuation. This name never belonged over $100.
Let's put some good juju in the
Needs
air.
some time to consolidate for their valuation to catch up to them.
Yeah, it needs to build into its valuation because it can be worth that value as a company one day. It's just not today.
100%. Like I like Snowflake, for example. Like if you want to use them, like they're totally different businesses. Or even MongoDB.
5 minutes.
MongoDB
5-minute warning.
A 30% cheaper valuation than Cloudflare. MongoDB is the number 2 most expensive growth tech stock.
Right now, Jamshid. I apologize. I tried, and then it just didn't go well. I have 2 monitors going right now, but that's all. I probably need more.
Remember that like 30% up day too, or like in
Let's get this Powell photo going on here.
Yeah, right.
Oh, Ace the Kid, Ace the Kid.
Like, the rest of the industry also has rallied, right? And like so has like tech in general. Do you kind of like include that piece as like some, like, I guess, unnecessary added implied volatility that
What's up, Zaros?
Extra price momentum upwards that, like, in reality today is getting corrected for, right? So, like, I think short-term volatility there might have overbuilt in what the expectations could have ever accounted for today.
100%, and also like there's some technical breakouts.
If Apple doubles in after hours, face reveal.
They broke out that
there you go.
10%
isn't enough.
High 80s, then they skyrocketed for short squeeze. Technical traders came in for momentum, but now again, like it's probably going to use the high 80s as the next like resistance. Like let's see if it gets there, but I wouldn't be surprised if it goes back to the stage 1 base of just like hanging around the 70s. Like this is exactly what Snowflake has done for multiple years since their IPO.
It won't mean anything lesser about the business, though, is what I'm saying.
100%. That's the thing. Like, it just needs to catch up. Like,
here we go.
I won't sell it. Exactly. It's really hard for me to sell. I got it in the 40s. It's really hard for me to sell.
If you're in here and enjoy these spaces, I want to be doing more of them. I'm saying this a couple times. Subscribe to the channel. It's hard to find them otherwise, but subscribe. You'll enjoy this stuff, and I'm trying to do a lot more of this spaces going forward. I'm actually going to be doing one tomorrow morning for that NFP print, so all you traders out there, bright and early, 8:30 a.m. Eastern, I'll be live on here making sure you're getting that NFP data the second it's out.
That to me was just so fascinating. That,
all right, let's try and recenter this conversation around Apple.
The value that this business can certainly be what its valuation is today. It's just pulled so much of that forward with market dynamics around it, plus its name and its sector it's in, just led for too much of that pull forward. But the value one day, I don't think it's off, right? If you were like to say I'm pricing in the exact future value of this, and I'm, you know what I mean?
Yeah, give the stream a like too. Why not? Appreciate that.
But I think
quick throw in. All right.
Quick question, Brett. Oh, sorry. You can go, Evan.
Yeah, I do want to jump in. Remember that because we got 3 minutes until these Apple numbers come out, and
Yo, what do you have for Apple? I have $90.5 billion for revenue and $1.50 for EPS.
I have $1.51 for EPS and $90.6 billion, so the same thing.
Same thing. Okay.
Same.
Revenue is down 4.5% year over year, and EPS is down 0.5% year over year.
We were talking about the implied move before. It was around 5-6% when you take out the 1 day normal move. I know we talked about that one. Apple, you should be expecting it to increase its dividend. It's currently 24 cents per share. This is that time of year where they increase it. So last time they increased it by 1 cent. Fingers crossed here. My toes are crossed, everything like that. Give me a couple cents. Give me like a. No, they're locked together. I don't know. Whatever. We'll continue off of that one. Way to make it weird.
We'll find out how much extra Tim Cook's gonna pay himself annually.
Yeah, we'll see. We'll get that one. I'm for more. Come on, increase my my Apple dividend. It's currently 24 cents. Was 23 cents. So I would say in my heart I'm expecting 25. In my head, I'm expecting 25. In my heart, I'm hoping for 26 or 27. So let's see. We got these Apple numbers coming out in 1 minute or so. I got the stock on watch. EPS is expected to be $1.51, $1.50 as we're saying. Revenue is expected to be right around that $90.5 billion dollar mark. Both numbers are down year over year. So we don't got to talk too deep into that one. But Apple numbers out any minute now. Here we go.
This is the Super Bowl for Evan.
This is my Super Bowl. I may just end the stream. I may just leave. If I'm down 10% after this, I'm gone. It was nice knowing you guys on the spaces. Maybe be back tomorrow.
Evan will end everything.
Nope. End the spaces, gone. I'm going to make... If Apple's down 10% after this, Wolf, we're ending the stream right there.
I think Ryanair is out, but I don't think anyone cares about Ryanair.
Apple Hive Day right now.
I don't even know it's out yet for
The
Apple.
good juju. Come on, Apple.
5 seconds. 4, 3, 2.
Oh, move higher.
1.
Come on. Initial
Apple.
move higher. I'm waiting to get these numbers in front of me. There it is. Apple. EPS revenue of $90.8 billion, beating expectations of $90.5 billion. EPS of $1.53, beating expectations of $1.51. Beat on both top and bottom line, albeit not by much on either of them.
Apple up 2%.
Woo! 2% is better than down. Apple dividends, 25 cents per share. Damn it, you only increased my dividend by 1. Come on! You guys have so much cash flow. Give me more. But we'll take it. Apple, 177 in after hours. Let's see if it can hold it.
2.5%.
The board also authorized a new $110 billion share buyback program.
Holy.
Oh, that's the Apple. That's the Apple. And it's pushing the indexes now. SPY's up 0.25% after hours.
Oh, dude, Apple is so big. We even got my my YouTube chat going crazy off of it. That's hilarious. Let's go. But yeah, new $110 billion share buyback program from Apple. All right. Yeah, they do give their forward guidance on the call. They don't really give forward guidance. That's a strong word. Apple will tell you indications. So last quarter, what they said is we expect revenue to be more or less unchanged, taking out the FX impact we have. And that was Apple's way of saying we think revenue is going to be down around 0 to 5% year over year next quarter. It was the best way anyone has ever said we expect our revenue to be down next quarter. And I would expect some similar type of language from Apple for that. Warren Buffett chilling right now. He does have that Warren Buffett Berkshire Hathaway annual shareholder meeting over the weekend, so let's give it a little bit of boost. Apple over 180. Come on.
So let's look at the breakdown for Apple. Product revenue down 10% year over year. iPhone revenue down 10%. Mac revenue up 4%. iPad revenue down 17%. Variable home revenue down 10%. Services are 14%. China revenue down 8%.
China revenue down 8%. It felt like we were getting ready for something worse than that.
If you think the iPhone print was lower.
Yeah, let me try and get the by region in front of me, get all that stats, but
it looks like they beat on revenues for iPhone and China.
yeah, that's what I'm seeing as well.
iPhone revenue was 45.96. Market expected 45.76.
It's a
So
beat.
that's a beat.
Greater China revenue beat as well. Let's go.
Is pushing the market.
178.
If we have strong data tomorrow, the market's gonna go bananas. Like we actually might test 50 day. Who knows? It's gonna be a great
Jordan
day.
does know what I. Ooh. Fuck. Come on,
Did
Apple.
anyone
Sorry,
look at
Shy.
Alibaba there? Up 7%.
Jordan does know what I look like. Face reveal coming at some point. We'll see.
Today, but yeah, Alibaba
You
did
don't have the
well. This is
facilities for that,
GDP numbers from
Bugman.
Hong Kong this morning.
Sorry, Crip Cam, if you're in here and heard that. That was
Did you see those,
disgusting.
Gert?
I don't. I
Show
was
your
like,
face. Oh, fuck
Yeah,
you
there
guys.
was a huge beat in Hong Kong on GDP.
Nice.
2.9 versus 0.8 expected.
Alibaba is almost my biggest position now. Apple has been lagging, but
I'm just seeing a nice wick up in my portfolio. Oh, this is beautiful. It's not as big as it hopefully could be or should be, but come on, we got to hold these gains. Ooh, over 180.
Yeah, that stock buyback program, that's the ace up Apple's sleeve. You know, Apple's stock performance has been very much helped in the past decade by stock buybacks, and here they are doing it again. That was a good good card to pull out of the sleeve at this juncture.
Apple does it every year though.
No, I know, but it's a nice buyback program to kind of relieve some of the concerns, I think, and also the beat on China is probably instilling a lot of confidence in people that were concerned about that. Because what was the expected miss on China? I think somebody mentioned this earlier. Like, what was the expected
20 something percent.
For China, expected revenue was 16.37. No, expected was 15.87. They reported 16.27.
Yeah,
$1
there you
billion
go.
beat.
I think that's where a lot of the sentiment boost is coming from too. That, the buyback, the dividend increase. Yeah, I mean, nice reaction so far. Up 4%, dragging the market with it.
Let's go, Apple. Let's get to what was it? 10.
0.25% after hours, as is most of the other indexes.
I was muted there on the spaces.
XLK technology.
Paper, I'll fix the charts at some point.
After
I love you. I may need your help though.
XBI's up, RK's up. Everything's getting dragged with this.
The rest of Asia seems to be even worse than China for Apple.
Let's get this posted to Instagram.
Japan too. Japan's down 10%. Rest of Asia is down 16-17%. That's a lot.
All right, we got that. Let's get Apple Investor Relations.
It's basically
refresh
services
page.
that bail them out again. Otherwise, it would have been terrible quarter.
Read more. Hey, stock go up. That's all I see. No, I'm kidding. But
Yeah, look, they've done enough to not negatively impact the market, so that's a good thing. The way, like I said at the beginning of the call, right? Even if NFP numbers are bad, this will help, right? Bad Apple numbers plus bad NFP would have been much, much, much worse. Now that, you have this automatic, safety zone here with the mega caps, all of the mega caps now. So this is a good thing.
Coin was down. Ooh, Coin with a little bit of a revert? No, not fully. Coin is down in after hours, no?
A bit surprising, to be honest, with those numbers.
Yeah, Coinbase with the wick down. Is that the Emperor Door is asking? Is that the largest buyback in stock market history? 110 billion. I think it might be. I don't know many other companies who would have been able to beat that.
I mean, last year, then...
No, Apple has been a long-term holding for me, so not selling that one.
If I remember correctly.
And yes, we need the AI headlines from Apple now. That's what I'm waiting for. Come on.
They announced 90 billion. And 20th of April, they announced a $90 billion 2 years ago. So
Green from open. Fair enough. I hear you, Paper. Let's try and change these charts.
Paid off $6 billion in long-term debt.
Dark mode.
Non-current debt.
Refresh. Why didn't that work? What'd you say on debt, Monative? Apple has an aggressive amount of debt. That I know.
Yeah. 140 billion in non-current liabilities, right? So 91 billion.
Bad
in
Paper.
long-term
Dark
debt,
mode. What do we think of this chat? What do we think of this new
billion,
chart?
But that's down from 145. So we're down
Bang,
from
bang, bang.
145 to 139. So they've taken out.
Cena, it's honestly a little bit of a different area for me because I've owned Apple for 12, 13 years ago. I have a crazy low cost basis, and that will cost me a lot of money to sell in taxes. So I'm probably just holding, building around that position. I still think it's got years to leg.
Still making a lot of money. I think that's what people tend to forget, is that they generate a shit ton of money.
They do have a lot of debt, and when you look at the net number of it, it is a little bit lower, but Apple's still throwing off $100 billion of free cash flow a year. I didn't see what the free cash flow number was in here. I'll have to look at it.
Operating cash is 62.5 billion.
Is that a lot?
Well, it's the same as last year Q1, but it's a lot of money, right? 62 billion is more than the GDP of
iPhone down year
dozens
over
of
year,
countries.
Mac up, iPad down, wearables down, services with nice growth. Yeah, that growth in services is pretty nice. 23.9 billion, up from 20.9 billion. I know we've talked about Kevin with this one a lot. Apple, that's what they want to see. They have a significantly higher margin there as well. So, I could see why you don't want to see your core business falling back, but having a good ancillary business with higher margins that's been growing pretty successfully isn't a bad thing.
Yeah, they bought back $43 billion in stock.
Is that a lot? I ask again.
Yes.
Apple may have saved Coin. We'll see. It's yet to be determined, but Coin did recover a little bit off that minus 4% move to the downside with this market move up.
Where do you see that 40 billion number?
On they don't put page numbers. What the hell? It's the last page of their
Repurchase of common stock, 43.4 billion. Yeah, I see it.
Yeah.
Let's get that to you now.
Dog Talk, watch out for Shift 4 sympathy play tomorrow based off Block's print.
Oh, yeah, that could be a good one. Yeah, that's a good idea. I think it's going to move most of the fintech stocks, but that might be the best play.
What do you know? Bill is actually positive. Well, flattish, but not bad.
So, okay. Do we think Apple, with this buyback, do we think because the stock was down a lot, they might have accelerated it? Do we think it's just Q1 was a good time for it? 43.3 billion, and last year they did around 40 billion. At that pace,
Yeah.
at that pace there, so this must be just normally a big quarter for them, because that's $160 billion of share buybacks that they might be doing.
It's not even through the year, so I'm not surprised. And they can always reauthorize, so it's not a problem. Like I said, when you generate $62 billion in cash and you're starting to pay off debt also, this is nothing. This is still $43 billion is not a reach for them, even if they keep it consistent, but they're not consistent every quarter. They do time the market.
Is free cash flow going to be in this report, or are we going to have to calculate that? Having some troubles with my mouse. Wait, trying to find it. All right, there we go. Is free cash flow in here? Because, I mean, when you're buying back $40 billion worth of your stock and your free cash flow is still positive, I think that's good. I'm so biased, though, and I know it. I do recognize that. Let me try and find this in here. Wolf, what are you watching here? You got anything you want to add to the conversation while I'm looking for this?
I'm just looking at the reaction still. I'm just seeing if Apple can get positive year to date. It's actually down 2% year to date now.
Ooh.
It's up over 6% after hours. That is a huge move.
Let's go!
Yeah. Pretty sick. Not too far off all-time highs, to be honest.
Kevin, my fellow person who's been saying nice things about Apple up here. Can we laugh at everyone else, or what's up?
Look, top line, bottom line, decent. Greater China sales, better than the street's expectations, right? Especially, I think they beat that metric by about $1 billion. I think if you are an Apple bull,
Rupesh,
you're
85, let's go.
Report.
It's fantastic.
If you are an Apple bull, you're also very, very, very thankful for the European market, because the European market actually brought it over the top. When it came to their sales, they actually beat the European estimates by around, I would say about $2 billion. I think it's like $1.8 billion. Without
Paper
that,
Gains, you like the dark charts? You say it, I do it.
Number, and probably most likely would have missed the bottom line, even if we did see China come in stronger. But I think this is a decent report. It got over that hurdle. It got over the fear. We're seeing the stock up about $10. That's better than the expected move that was being priced out. Right now, let's see if it's going to hold. We have the conference call. Apple is not really known for having a negative conference call, right? They're very conservative. Tim Cook is going to try to sell a vision. He's going to try to sell a dream. They continue to talk about this product launch or the product announcement that's going to be happening here, I think in the next week or 2 weeks or what have you. Let's see if he drops a little bit of nuggets there to try to put some icing on the cake. You got an increase in the dividend. Buybacks continue to be strong. And overall, it's a decent report on the surface. But once again, once you start looking into the revenue mix, North American sales, for the most part, were a little bit weak. When you're looking at Japan sales, a little bit weak. When you're looking at wearables, still not meeting the street's expectations on a quarter-over-quarter basis. The Mac sales were phenomenal. They finally may have seen a little bit of a bottom there. We know about the refresh cycle that Monative was just kind of talking about as well.
And
that
tomorrow we run it back, NFP.
So
get
I
us some
think this
big
was a
moves.
decent report. Is this going to be the report that turns around the overall broader market? No, I don't think so. Maybe if this thing moves up another $10 for whatever reason, maybe so. But I think if you are a shareholder, you're happy with it, you want to be able to move forward, if we can stay at this particular level, you were able to hold that 160 to 162 level from a technical standpoint. You did not want to break that. And now the next hurdle is going to be $200. And if you can break above that with some strong volume, that's when you're going to get a little bit more momentum for this stock over the next couple of months and quarters. So yeah, I thought it was a decent report. Certain cracks in the market, but they hit where they needed to be hitting. And I think that's really important for the stock right now.
Yeah, they will have to explain what's going on in Asia, right? I mean, yeah, they saved a little bit on China, but Japan looks terrible. Rest of Asia looks worse, like almost 15% down. That's ugly. So they'll have to explain that.
Yeah, no, I'm right there with you. Like I said, Europe bailed them out. Who would have thought that would be the market to really bail them out? But they were able to get across the hurdle there. They will have to talk about it. Look, and the expectations when it comes to China as well may have been just a little bit low. Right? I mean, we know that there was going to be a little bit low. I think the other question too, Monative, and I wish we got the quantity sales for iPhones, but we don't know. Right. So is the increase in revenue or them beating by what, 1 billion or 2 billion, or it was like 1 billion or something like that, right? Is that the result of quantities staying for the most part steady and prices staying steady, or did they have any type of pricing power in China that was offsetting maybe some of the slowing in quantity? We don't know that. And I think that would be actually some really decent insights into that market. But once again, it's kind of like if you win the game by a point, if you win by 20 points, a win's a win. And I think that's kind of what they're doing right now. It's a victory lap, even though there's cracks in their report for sure. And I'm right there with you, especially in the Asian markets.
Yeah, so just a quick geographical overview here. I know we chatted about a few of them, but so Greater China down 8.1% year over year, but beating expectations. Rest of Asia Pacific down 17.2% year over year. Japan down 12.7% year over year. America is down 1.4% year over year. And Europe, as Kevin mentioned, up 0.7% year over year.
Oh, I love you, Emp.
So the geographical concerns are still there. I mean, the international concerns are still there. Apple should.
I'm still dealing with talking on the spaces by accidentally. We'll get that problem solved eventually.
Going forward, because they skated by with the Europe beat, and they skated by with the 110 billion share buyback, the dividend increase, etc. But those international figures, I mean, they're just objectively concerning. No growth in international markets.
One thing we do have to note, though, their year-over-year comps for next quarter should be a pretty low bar. I hope. They should be able to hit these year-over-year comps, because that's where we really started seeing it, fall off. So that might be a bright spot. Maybe that's not a bright spot, right? We get so many estimates on this company that we probably can discount some year-over-year numbers.
I love to hear that you enjoyed it.
So many analysts that are in tune with
How'd I say the name?
But
right, wrong?
Again, I think it does become a little bit favorable for them this next quarter if they're able to maintain some of the growth rates.
But I will keep doing them. I appreciate you.
Like in Europe, or if they can at least maintain in the Americas segment, I think they should have a little bit more of a bright spot. Once again, there are cracks that are showing up. Wearables is a very small business, but guys, correct me if I'm wrong. I have not seen this company actually hit a wearables expectation in a very long time. It's got to be like 6 quarters. So I don't know what's going on there. Maybe there's just way too much hype on the analyst community on that
Yeah,
side.
I don't see
but
anything for your
it seems to
Pollo
be an area
Loco.
of weakness. But once again, the other side of that, the area of strength is Mac, and Mac has been eating their lunch when it comes to poor performance over the last couple of quarters too. So if you do see a
I tried my
bottoming
best.
in that area, I mean, that's not only just impactful for Apple. We're talking about and Stock Talk. We're talking about all of these stocks that have that exposure. These semiconductor companies that are now starting to get a little bit more favorable tones in the PC market. Maybe that is a bottom for them, or maybe it's Apple specific, right? In the refresh cycle, their new chips that they're putting in, who knows? But I think Mac was also a very big surprise for me compared to where my bar was.
Yeah, AMD set pretty low bar too. So if we do have a refresh cycle that
Let's
picks
see what your
up,
Loco's
it'll be
doing
good
in
for
after
AMD
hours.
also to have a nice beat.
I mean, I don't know what the fuck's happening there. So what are we waiting for on this Apple earnings call here? Should be starting at 5 p.m. Eastern, about 10 minutes from now. Are we really just kind of waiting for that AI discussion part of it? Is that really what we're expecting here? So Apple will give you, we've talked about here, kind of forward guidance on the call. They're going to tell you leans. They're going to tell you we expect it to be similar growth to last quarter, low single digits, high single digits. 50%. No, I'm kidding. They're not gonna say that. That'd be cool. But yeah, that's the general language they're gonna give. That should move Apple stock. I'd imagine that's gonna happen around 5:10, 5:15 as the CFO starts to talk. But besides that, are we really listening for any AI conversation here on this Apple earnings call? I think that's what could maybe move the stock from here more.
I mean, I don't think that's going to be the core of their call. Apple has done a very good job, actually. One thing I will give them commendation for and give Tim Cook credit for is they did not fall into the whole say AI 600 times on the call thing. So I actually like that decision. But I do expect them to announce at some point some kind of AI products. I mean, they can't just not participate in the space. So whether that's the Siri LLM, which again I think is inevitable. I don't know when it's coming, but I do think that's inevitable. Or whether that's investments in compute. I'm curious to hear if they're following suit with the other Mag 7 and making these massive investments in compute.
Can you guys hear this music? This is from the Apple earnings call. If you can hear it, then we're going to listen to it. If you cannot hear it, then we're not going to listen to it. Do you hear this music clearly right now? Let me know in the chat. Let me know in the chat. They're just saying don't forget a bunch. Alright, we're going to put that on mute. Let me know if you guys heard that. If not, then we're not going to play the call. If you did, then we're going to play it.
An Apple shareholder, just from my standpoint, I'm not an Apple shareholder, but I know you are, Evan. So from my standpoint, I would just want the international concerns to be addressed. The idea that they're seeing no growth in any international markets, I mean, outside of Europe, which was a very, very slight year-over-year growth, seeing 10, 15% declines year-over-year in revenue in international markets is a serious concern. And, regardless of what the stock's doing now, they need to address that very clearly.
Never bet against an Apple. Go for it, Kevin.
Yeah, I was going to say, Monitor brought up a really good point earlier when we were kind of talking about this in the preview. And I think it goes, we had this conversation a little bit yesterday, and I was getting kind of flack for it, right? Like the partnerships that Apple can actually have on trying to get into the AI space rather than trying to do it in-house. One, it's going to shorten their time, and then two, kind of alleviate some of the pressures there for technology that's already out there. That it seems like there should be, a deal that to be made, at least in the near term, and then see if they want to be able to expand it out. But I feel like that's kind of the route to go. And we kind of talked about the organic growth and what our R&D departments are doing and all of this stuff. But at the end of the day, I mean, they're so big that they could probably get into a partnership or buy something and implement rather than trying to come up with something from scratch. And just to think about this as well, you can have multiple AI platforms and models in place in one company, right? Just because you have AI doesn't mean that has to be across the board. If you heard Meta's call that we had last week, they have several, and they're trying to integrate it all into one. But Apple sounds like it's going into the AR VR space and wants to double down on that. That's a completely different AI model and system and environment. When you're talking about AI, when you're talking about AI, when you're talking about the VR headsets, and that experience is completely different from the LLM experience, right? So they could actually put their hands in several different areas and still work on artificial intelligence, but they're just going to be different systems. And so I think that's also another thing to kind of keep in mind. If they do have a partnership in order to roll out an LLM for Siri, right, which is cool, right? I'm trying to really think about, I mean, I know Siri, the experience is probably not that great right now, but I don't know how much more benefit you would get from Siri being an LLM compared to kind of what the actual use case is for it now. But I could be completely wrong, whereas they can actually invest a lot more money in-house to be able to build out the overall ecosystem in the universe.
One second, I'm going on mute and fixing the mic.
Just because they say AI doesn't mean that's like a monolith across the whole company. There's several different things that they're probably putting in motion right now that we just don't know about.
We got about 5 minutes until that earnings call starts. I am watching it in the background, so we'll definitely make sure we're listening it to live in these spaces, the earnings calls.
Apple moving higher.
All right, I'll accept that interruption. I'm happy with that one. If Apple keeps going higher, you can keep interrupting me. That's cool. That one's okay. If Apple's moving lower and you interrupt me, then it's over. We throw hands. Awesome. We got about 5 minutes left into this call. 4 minutes. Kevin, quickly, any of the other earnings that we got in after hours interesting for you? A DraftKings, a Coinbase. Coinbase blowing out the numbers. I'm sure maybe some of that impact is from the Bitcoin ETFs. That kind of they're starting to see that impact during this past quarter. But Coinbase, and it was also moving lower. I haven't checked back. I know paper was saying it was up, at least green from when the day started. It's not the biggest downwards after hours move, but what are we watching here on some of these other earnings? Anything interesting for you?
Oh man, the most sexiest name that reported after hours is definitely Expedia. But it's actually a really good one to actually watch. We saw an initial pop to the upside, but they did adjust their guidance because of the was it Rebro or what have you? Their offering that's really challenging. Airbnb, they're not able to get the re-platform and ramp up as much as they expected in the previously. So they did lower their guidance not only for top line growth but also for their revenue guide moving forward. And then once again you miss on guidance moving forward, or you revise that to the downside, the stock's going to get hit. And so we saw that stock move down, let's say around $12. And then you go to the other one here, Booking, which is was actually popping here. Let's see if it's going to maintain very wide spreads, to say the least. But they beat their earnings estimates by like 45%, which is remarkable. I mean, they've been able to just knock it out of the park when it comes to their operations, growing on the top line, reducing expenses, not even having to leverage the marketing side of their business as much, right? We only saw 6% growth on a year-over-year basis when it came to marketing expense, but their top line growth for revenue came in at 17%. That's margin accretion right there, right? That's margin expansion. So they're doing all the right things. They got their hands on a couple of other different things that Expedia does not, but I can tell you that it's really impactful and insightful to see what areas in the travel and leisure space are really gaining a lot of traction, gaining steam, and which ones are kind of seeing some weakness. Unfortunately for Expedia, it's just that they have one part of their arm of their business that's just not cutting the mustard. And I think Booking is able to take a fair amount of market share if it continues to have those type of results here, because there's not a lot in that space in this particular niche that money managers can really direct dollars to, right? So I think those are the two that I were actually focusing on after hours here today.
Gotcha. I appreciate it. We got about 2 minutes left until this Apple earnings call starts, so we're going to keep a listen over in that direction. Does anyone know, was there a company that's announced a larger share buyback before than 110 billion?
No, it's the largest one.
There we go. All right.
Another bright spot on that bookings report, just to piggyback on what Kevin was saying, was the room nights booked. That was a big beat. So room nights booked were up 8.5% to 297 million bookings for the quarter. That's versus expectations of a growth of just 6%. So that's a big beat on room nights booked. There could be some read through to the hotel stocks tomorrow based off this. Could be some read through to the airlines as well. So just keep that in mind.
All right, let's test the quality of the sound. Can you guys hear? Yes, no, good, bad.
Yeah, I mean it's low.
You're good. You're good. Yeah.
That's about as good as it's gonna get. Loud enough?
Yeah, I think people just turn up the sound on their end.
Okay. Well, I'll unmute when that comes around.
Yeah, it sounds good.
Oop.
Good afternoon and welcome to the Apple Q2 Fiscal Year 2024 Earnings Conference Call. My name is Suhasini Chandramouli, Director of Investor Relations. Today's call is being recorded. Speaking first today is Apple's CEO, Tim Cook.
Come on, Tim.
And he'll be followed by CFO, Luca Maestri. After that, we'll open the call to questions from analysts. Please note that some of the information you'll hear during our discussion today will consist of forward-looking statements, including, without limitation, those regarding revenue, gross margin, operating expenses, other income and expense, taxes, capital allocation, and future business outlook, including the potential impact of macroeconomic conditions on the company's business and results of operations. These statements involve risks and uncertainties that may cause actual results or trends to differ materially from our forecast. For more information, please refer to the risk factors discussed in Apple's most recently filed annual report on Form 10-K and the Form 8-K filed with the SEC today, along with the associated press release. Apple assumes no obligation to update any forward-looking statements, which speak only as of the date they are made. I'd now like to turn the call over to Tim for introductory remarks.
Thank you, Suhasini. Good afternoon, everyone, and thanks for joining the call. Today, Apple is reporting revenue of $90.8 billion and an EPS record of $1.53 for the March quarter. We set revenue records in more than a dozen countries and regions. These include, among others, March quarter records in Latin America and the Middle East, as well as Canada, India, Spain, and Turkey. We also achieved an all-time revenue record in Indonesia, one of the many markets where we continue to see so much potential. In services, we set an all-time revenue record, up 14% over the past year. Keep in mind, as we described on the last call, in the March quarter a year ago, we were able to replenish iPhone channel inventory and fulfill significant pent-up demand from the December quarter COVID-related supply disruptions on the iPhone 14 Pro and 14 Pro Max. We estimate this one-time impact added close to $5 billion to the March quarter revenue last year. If we remove this from last year's results, our March quarter total company revenue this year would have grown. Despite this impact, we were still able to deliver the records I described. Of course, this past quarter, we were thrilled to launch Apple Vision Pro, and it has been so wonderful to hear from people who now get to experience the magic of spatial computing. They describe the impossible becoming possible right before their eyes, and they share their amazement and their emotions about what they can do now, whether it's reliving their most treasured memories or having a movie theater experience right in their living room. It's also great to see the enthusiasm from the enterprise market. For example, more than half of the Fortune 100 companies have already bought Apple Vision Pro units and are exploring innovative ways to use it to do things that weren't possible before. And this is just the beginning. Looking ahead, we're getting ready for an exciting product announcement next week that we think our customers will love. And next month, we have our Worldwide Developers Conference, which has generated enormous enthusiasm from our developers. We can't wait to reveal what we have in store. We continue to feel very bullish about our opportunity in generative AI. We are making significant investments, and we're looking forward to sharing some very exciting things with our customers soon. We believe in the transformative power and promise of AI, and we believe we have advantages that will differentiate us in this new era, including Apple's unique combination of seamless hardware, software, and services integration, groundbreaking Apple Silicon with our industry-leading neural engines, and our unwavering focus on privacy, which underpins everything we create. As we push innovation forward, we continue to manage thoughtfully and deliberately through an uneven macroeconomic environment and remain focused on putting our users at the center of everything we do. Now let's turn to our results for the March quarter across each product category, beginning with iPhone. iPhone revenue for the March quarter was $46 billion, down 10% year over year. We faced a difficult compare over the previous year due to the $5 billion impact that I mentioned earlier. However, we still saw growth on iPhone in some markets, including mainland China, and according to Kantar, during the quarter, the two best-selling smartphones in urban China were the iPhone 15 and iPhone 15 Pro Max. I was in China recently where I had the chance to meet with developers and creators who are doing remarkable things with iPhone. And just a couple of weeks ago, I visited Vietnam, Indonesia, and Singapore, where it was incredible to see all the ways customers and communities are using our products and services to do amazing things. Everywhere I travel, people have such a great affinity for Apple, and it's one of the many reasons I'm so optimistic about the future. Turning to Mac, March quarter revenue was $7.5 billion, up 4% from a year ago. We had an amazing launch in early March with the new 13 and 15-inch MacBook Air. The world's most popular laptop is the best consumer laptop for AI, with breakthrough performance of the M3 chip and its even more powerful neural engine. Whether it's an entrepreneur starting a new business or a college student finishing their degree, users depend on the power and portability of MacBook Air to take them places they couldn't have gone without it. In iPad, revenue for the March quarter was $5.6 billion, 17% lower year over year due to a difficult compare with the momentum following the launch of M2 iPad Pro and the 10th generation iPad last fiscal year. iPad continues to stand apart for its versatility, power, and performance. For video editors, music makers, and creatives of all kinds, iPad is empowering users to do more than they ever could with a tablet. Across wearables, home, and accessories, March quarter revenue was $7.9 billion, down 10% from a year ago due to a difficult launch compare on Watch and AirPods. Apple Watch is helping runners go the extra mile on their wellness journeys, keeping hikers on course with the latest navigation capabilities in watchOS 10, and enabling users of all fitness levels to live a healthier day. Across our watch lineup, we're harnessing AI and machine learning to power life-saving features like irregular rhythm notifications and fall detection. I often hear about how much these features mean to users and their loved ones, and I'm thankful that so many people are able to get help in their time of greatest need. As I shared earlier, we set an all-time revenue record in services with $23.9 billion, up 14% year over year. We also achieved all-time revenue records across several categories and geographic segments. Audiences are tuning in on screens large, small, and spatial, and are enjoying Apple TV Plus originals like Palm Royale and Sugar. And we have some incredible theatrical releases coming this year, including Wolves, which reunites George Clooney and Brad Pitt. Apple TV Plus productions continue to be celebrated as major awards contenders. Since launch, Apple TV Plus productions have earned more than 2,100 award nominations and 480 wins. Meanwhile, we're enhancing the live sports experience with a new iPhone app, Apple Sports. This free app allows fans to follow their favorite teams and leagues with real-time scores, stats, and more. Apple Sports is the perfect companion for MLS Season Pass subscribers. Turning to retail, our stores continue to be vital spaces for connection and innovation. I was delighted to be in Shanghai for the opening of our latest flagship store. The energy and enthusiasm from our customers was truly something to behold. And across the United States, our incredible retail teams have been sharing Vision Pro demos with customers, delighting them with the profound and emotional experience of using it for the very first time. Everywhere we operate, in everything we do, we're guided by our mission to enrich users' lives and leave the world better than we found it. Whether we're making Apple Podcasts more accessible with a new transcripts feature, or helping to safeguard iMessage users' privacy with new protections that can defend against advances in quantum computing. Our environmental work is another great example of how innovation and our values come together. As we work toward our goal of being carbon neutral across all of our products by 2030, we are proud of how we've been able to innovate and do more for our customers while taking less from the planet. Since 2015, Apple has cut our overall emissions by more than half, while revenue grew nearly 65% during that same time period. And we're now using more recycled materials in our products than ever before. Earlier this spring, we launched our first ever product to use 50% recycled materials with a new M3-powered MacBook Air. We're also investing in new solar and wind power in the US and Europe, both to power our growing operations and our users' devices. And we're working with partners in India and the US to replenish 100% of the water we use in places that need it most, with the goal of delivering billions of gallons of water benefits over the next 2 decades. Through our Restore Fund, Apple has committed $200 million to nature-based carbon removal projects. And last month, we welcomed 2 supplier partners as new investors who will together invest up to an additional $80 million in the fund. Whether we're enriching lives of users across the globe or doing our part to be a force for good in the world, we do everything with a deep sense of purpose at Apple. And I'm proud of the impact we've already made at the halfway point in a year of unprecedented innovation. I couldn't be more excited for the future we have ahead of us, driven by the imagination and innovation of our teams and the enduring importance of our products and services in people's lives. With that, I'll turn it over to Luca.
Thank you, Tim, and good afternoon, everyone. Revenue for the March quarter was $90.8 billion, down 4% from last year. Foreign exchange had a negative year-over-year impact of 140 basis points on our results. Products revenue was $66.9 billion, down 10% year-over-year, due to the challenging compare on iPhone that Tim described earlier, which was partially offset by strength from Mac. And thanks to our unparalleled customer satisfaction and loyalty and a high number of customers who are new to our products, our installed base of active devices reached an all-time high across all products and all geographic segments. Services revenue set an all-time record of $23.9 billion, up 14% year-over-year, with record performance in both developed and emerging markets. Company gross margin was 46.6%, up 70 basis points sequentially, driven by cost savings and favorable mix to services, partially offset by leverage. Products gross margin was 36.6%, down 280 basis points sequentially, primarily driven by seasonal loss of leverage and mix, partially offset by favorable costs. Services gross margin was 74.6%, up 180 basis points from last quarter due to a more favorable mix. Operating expenses of $14.4 billion were at the midpoint of the guidance range we provided and up 5% year over year. Net income was $23.6 billion, Diluted EPS was $1.53 and a March quarter record, and operating cash flow was strong at $22.7 billion. Let me now provide more detail for each of our revenue categories. iPhone revenue was $46 billion, down 10% year over year, due to the almost $5 billion impact from a year ago that Tim described earlier. Adjusting for this one-time impact, iPhone revenue would be roughly flat to last year. Our iPhone active install base grew to a new all-time high in total and in every geographic segment. And during the March quarter, we saw many iPhone models as the top-selling smartphones around the world. In fact, according to a survey from Kantar, an iPhone was the top-selling model in the US, urban China, Australia, the UK, France, Germany, and Japan. And the iPhone 15 family continues to be very popular with customers. 451 Research recently measured customer satisfaction at 99% in the US. Mac revenue was $7.5 billion, up 4% year over year, driven by the strength of our new MacBook Air, powered by the M3 chip. Customers are loving the incredible AI performance of the latest MacBook Air and MacBook Pro models. And our Mac installed base reached an all-time high, with half of our MacBook Air buyers during the quarter being new to Mac. Also, customer satisfaction for Mac was recently reported at 96% in the US. iPad generated $5.6 billion in revenue, down 17% year over year. iPad continued to face a challenging compare against the launch of the M2 iPad Pro and iPad 10 generation from last year. At the same time, the iPad install base has continued to grow and is at an all-time high, as over half of the customers who purchased iPads during the quarter were new to the product. In addition, the latest reports from 451 Research indicated customer satisfaction of 96% for iPad in the US. Wearables, home, and accessories revenue was $7.9 billion, down 10% year over year, due to a difficult launch compare. Last year, we had the continued benefit from the launches of the AirPods Pro 2nd generation, the Watch SE, and the first Watch Ultra. Apple Watch continues to attract new customers, with almost two-thirds of customers purchasing an Apple Watch during the quarter being new to the product, sending the Apple Watch install base to a new all-time high. And customer satisfaction was recently measured at 95% in the US. In services, as I mentioned, total revenue reached an all-time record of $23.9 billion, growing 14% year over year, with our installed base of active devices continuing to grow at a nice pace. This provides a strong foundation for the future growth of the services business as we continue to see increased customer engagement with our ecosystem. Both transacting accounts and paid accounts reached a new all-time high, with paid accounts growing double digits year over year. And paid subscriptions showed strong double-digit growth. We have well over 1 billion paid subscriptions across the services on our platform, more than double the number that we had only 4 years ago. We continue to improve the breadth and quality of our current services, from creative new games on arcade and great new shows on TV Plus, to launching additional countries and partners for Apple Pay. Turning to enterprise, our customers continue to invest in Apple products to drive productivity and innovation. We see more and more enterprise customers embracing the Mac. In healthcare, Epic Systems, the world's largest electronic medical record provider, recently launched its native app for the Mac, making it easier for healthcare organizations like Emory Health to transition thousands of PCs to the Mac for clinical use. And since the launch of Vision Pro last quarter, many leading enterprise customers have been investing in this amazing new product to bring spatial computing apps and experiences to life. We are seeing so many compelling use cases, from aircraft engine maintenance training at KLM Airlines, to real-time team collaboration for racing at Porsche, to immersive kitchen design at Lowe's. We couldn't be more excited about the spatial computing opportunity in enterprise. Taking a quick step back, when we look at our performance during the first half of our fiscal year, total company revenue was roughly flat to the prior year, in spite of having one less week of sales during the period and some foreign exchange headwinds. We were particularly pleased with our strong momentum in emerging markets, as we set first-half revenue records in several countries and regions, including Latin America, the Middle East, India, Indonesia, the Philippines, and Turkey. These results, coupled with double-digit growth in services and strong levels of gross margin, drove a first-half diluted EPS record of $3.71, up 9% from last year. Let me now turn to our cash position and capital return program. We ended the quarter with $162 billion in cash and marketable securities. We repaid $3.2 billion in maturing debt, and commercial paper was unchanged sequentially, leaving us with total debt of $105 billion. As a result, net cash was $58 billion at the end of the quarter. During the quarter, we returned over $27 billion to shareholders, including $3.7 billion in dividends and equivalents, and $23.5 billion through open market repurchases of 130 million Apple shares. Given the continued confidence we have in our business now and into the future, our board has authorized today an additional $110 billion for share repurchases as we maintain our goal of getting to net cash neutral over time. We're also raising our dividend by 4% to 25 cents per share of common stock, and we continue to plan for annual increases in the dividend going forward, as we've done for the last 12 years. This cash dividend will be payable on May 16, 2024, to shareholders of record as of May 13, 2024. As we move ahead into the June quarter, I'd like to review our outlook, which includes the types of forward-looking information that Suhasini referred to at the beginning of the call. The color we are providing today assumes that the macroeconomic outlook doesn't worsen from what we are projecting today for the current quarter. We expect our June quarter total company revenue to grow low single digits year over year, in spite of a foreign exchange headwind of about 2.5 percentage points. We expect our services business to grow double digits at a rate similar to the growth we reported for the first half of the fiscal year. And we expect iPad revenue to grow double digits. We expect gross margin to be between 45.5% and 46.5%. We expect OPEX to be between $14.3 billion and $14.5 billion. We expect OI&E to be around $50 million, excluding any potential impact from the mark-to-market of minority investments, and our tax rate to be around 16%. With that, let's open the call to questions.
Thank you, Luca. We ask that you limit yourself to 2 questions. Operator, may we have the first question, please?
Certainly. We will go ahead and take our first question from Mike Ng with Goldman Sachs. Please go ahead.
Hey, good afternoon. Thank you very much for the question. I have 2. First, I'll ask about the June quarter guidance. The revenue outlook for low single digits growth. I was wondering if you could run through some of the product assumptions. iPhone, like what kind of gives you confidence around that? And then on the services momentum, what was better than expected in the quarter? And then I just have a quick follow-up.
Hey, Mike, it's Luca. On the outlook, what we said is we expect to grow low single digits in total for the company. We expect services to grow double digits at a rate that is similar to what we've done in the first half of our fiscal year. And we've also mentioned that iPad should grow double digits. This is the color that we're providing for the June quarter. In services, we've seen a very strong performance across the board. We've mentioned, we've had records in several categories, in several geographic segments. It's very broad-based. Our subscription business is going well. Transacting accounts and paid accounts are growing, paid accounts are growing, double digits. And also, we've seen a really strong performance both in developed and emerging markets. So very pleased with the way the services business is going.
Great. Thank you. And I wanted to ask about, as Apple leans more into AI and generative AI, should we expect any changes to the historical CapEx cadence that we've seen in the last few years of about $10 to $11 billion per year, or any changes to how we may have historically thought about the split between tooling, data center, and facilities? Thank you very much.
Yeah, we are all obviously very excited about the opportunity with Gen AI. We obviously are pushing very hard on innovation on every front, and we've been doing that for many, many years. Just during the last 5 years, we've spent more than $100 billion in research and development. As you know, on the CapEx front, we have a bit of a hybrid model where we make some of the investments ourselves. In other cases, we share them with our suppliers and partners. On the manufacturing side, we purchase some of the tools and manufacturing equipment. In some other cases, our suppliers make the investment. And we do something similar on the data center side. We have our own data center capacity, and then we use capacity from third parties. It's a model that has worked well for us historically, and we plan to continue along the same lines going forward.
Excellent. Thank you very much.
Awesome. Thank you, Mike. Operator, can we have the next question, please?
Our next question is from Wamsi Mohan with Bank of America. Please go ahead.
Yes, thank you so much. Tim, can you talk about the implications to Apple from the changes driven by EU DMA? You've had to open up third-party app stores. Clearly, this poses some security risks on the one hand, which can dilute the experience, but also lower payments from developers to Apple. What are you seeing developers choose in these early days and consumers choose in terms of these third-party app stores? And I have a follow-up.
It's really too early to answer the question. We just implemented in March, as you probably know, in the European Union, the alternate app stores and alternate billing, et cetera. So we're focused on complying while mitigating the impacts to user privacy and security that you mentioned. And so that's our focus.
Okay, thank you, Tim. And Luca, I was wondering if you could comment a bit on the product gross margins, the sequential step down. You noted mix and leverage. Any more color on the mix, if you could share, if customers are at all starting to mix down across product lines, or is this more a mix across product lines? Just trying to get some color on customer behavior given some of the broader inflationary pressures. Thank you so much.
On a sequential basis, yes, we were down. It's primarily the fact that we had a slightly different mix of products than the previous one. Obviously, leverage plays a big role as we move from the holiday quarter into a more typical quarter. So I would say primarily leverage and a different mix of products. I mean, we haven't seen anything different. In terms within the product categories, we haven't seen, anything particular.
Thank you so much.
Thanks, Wamsi. We'll take the next question, please.
Our next question is from Eric Woodring with Morgan Stanley. Please go ahead.
Great. Thanks so much for taking my questions. Maybe my first one, Tim, you've obviously mentioned your excitement around generative AI multiple times. I'm just curious how Apple is thinking about the different ways in which you can monetize this technology, because historically software upgrades haven't been a big factor in driving product cycles. And so could AI be potentially different? How could that impact replacement cycles? Is there any services angle you'd be thinking? Any early color that you can share on that? And then I have a follow-up, please. Thanks.
I don't want to get in front of our announcements, obviously. I would just say that we see generative AI as a very key opportunity across our products. and we believe that we have advantages that set us apart there. And we'll be talking more about it in as we go through the weeks ahead.
Okay, very fair. Thank you. And then, Luca, maybe to just follow up on Wamsi's comments or question, there's a broad concern about the headwind that rising commodity costs have on your product gross margins. Wondering if you could just clarify for us, if we take a step back and look at all of the components and commodities that go into your products kind of collectively, are you seeing these costs rising? Are they falling? What tools do you have to try to help mitigate some rising costs, if at all, rising input costs, if at all? Thank you so much.
Yes, I mean, during the last quarter, commodity costs and in general component costs have behaved favorably to us. On the memory front, prices are starting to go up. They've gone up slightly during the March quarter. But in general, I think it's been, a period, not only this quarter, but the last several quarters where, commodities have behaved well for us. Commodities go in cycles, and so there's obviously always that possibility. Keep in mind that we are starting from a very high level of gross margins. We reported 46.6%, which is something that we haven't seen in our company in decades. And so we're starting from a good point. As you know, we try to buy ahead when, the cycles are favorable to us. And so we will try to mitigate if there are headwinds. But in general, we feel, particularly for this cycle, we are in good shape.
Thank you so much.
Great. Thank you, Eric. Operator, we'll take the next question, please.
Our next question is from Ben Reitzes with Melius. Please go ahead.
Hey, thanks for the question. And hey, Tim, I was wondering if I could ask the China question again. Is there any more color from your visit there that gives you confidence that you've reached a bottom there and that it's turning? I know you've continued to be confident there in the long term. Just wondering if there was any color as to when you think that the tide turns there. Thanks a lot, and I have a follow-up.
Yeah, Ben, if you look at our results in Q2 for Greater China, we were down 8. That's an acceleration from the previous quarter in Q1. And the primary driver of the acceleration was iPhone. And if you then look at iPhone within mainland China, we grew on a reported basis. That's before any kind of normalization for the supply disruption that we mentioned earlier. And if you look at the top-selling smartphones, the top 2 in urban China are iPhones. And while I was there, it was a great visit. And we opened a new store in Shanghai, and the reception was very warm and highly energetic. And so I left there having a fantastic trip and enjoyed being there. And so I maintain a great view of China in the long term. I don't know how each and every quarter goes and each and every week, but over the long haul, I have a very positive viewpoint.
Okay. Hey, thanks, Tim. And then my follow-up, I want to ask this carefully, though. There's a fear out there that, you may lose some traffic acquisition, revenue. And I was wondering if you thought, AI from a big picture, and it doesn't have to be, on a long-term basis, from a big picture, if AI is an opportunity for you to, continue to monetize your mobile real estate, just how maybe investors can think about that from a big picture, just given that's been one of the concerns that's potentially been an overhang, of course, due to, a lot of the news and the media around some of the legal cases. And I was wondering if there's just a big picture color you could give that makes us kind of think about it better and your ability to sort of continue to monetize that real estate? Thanks a lot.
I think AI, generative AI and AI, both are big opportunities for us across our products. And we'll talk more about it in the coming weeks, but I think there are numerous ways there that are great for us, and we think that we're well positioned.
Thanks, Tim.
Yep.
Thanks, Ben. Can we have the next question, please?
Our next question is from Krish Sankar with TD Cowen. Please go ahead.
Yeah, hi. Thanks for taking my question. Again, sorry to beat the AI horse, but Tim, I know you don't want to reveal a lot, but I'm just kind of curious because last quarter you spoke about how you're getting traction in enterprise. Is the AI strategy going to be both consumer and enterprise, or is it going to be one after the other? Any color would be helpful, and then a follow-up for Luca.
Our focus on enterprise has been, and through the quarter and the quarters that preceded it, on selling iPhones and iPads and Macs, and we recently added Vision Pro to that, and we're thrilled with what we see there in terms of interest from big companies buying some to explore ways they can use it. And so I see enormous opportunity in the enterprise. I wouldn't want to cabin that to AI only. I think there's a great opportunity for us around the world in enterprise.
Got it. Very helpful. And then for Luca, I'm kind of curious on, given the macro environment, on the hardware side, are you seeing a bias towards standard iPhone versus the Pro model? The reason I'm asking the question is that there's a weaker consumer spending environment, yet your services business is still growing and has amazing growth margins. So I'm just trying to square the circle over there. Thank you.
I'm not sure I fully understand the question, but in general, what we are seeing on the product side, we continue to see a lot of interest at the top of the range of our products. And I think it's a combination of consumers wanting to purchase the best product that we offer in the different categories and our ability to make those purchases more affordable over time. We've introduced several financing solutions, from installment plans to trade-in programs, that reduce the affordability threshold, and therefore customers want to buy at the top of the range. That is very valuable for us in developed markets, but particularly in emerging markets where the affordability issues are more pronounced. But in general, over the last several years, and that is also reflected in our gross margins, over the last several years, we've seen this trend, which we think is pretty sustainable.
Got it. Thank you very much, Luca. Thanks, Tim.
Thank you, Krish. Operator, we'll have the next question, please.
Our next question is from Amit Daryanani with Evercore. Please go ahead.
Thanks for taking my question. I have two as well. I guess first off on capital allocation, you folks have about $58 billion of net cash right now. As you think about eventually getting to this net cash neutral target, do you think at some point Apple would be open to taking on leverage on the balance sheet and continuing the buyback program, or is it more like once you get to this neutral, it will be about returning free cash flow back to shareholders? I'm just wondering, how do you think about leverage on your balance sheet over time, and what sort of leverage do you think you'd be comfortable taking on?
Hey, Amit, it's Luca. I would say one step at a time. We have put out this target of getting to net cash neutral several years ago, and we're working very hard to get there. Our free cash flow generation has been very strong over the years, particularly the last few years. And so, as you've seen this year, we've increased the amount that we're allocating to the buyback. For the last couple of years, we were doing $90 billion. Now we're doing $110 billion. So let's get there first. It's going to take a while still. And then when we are there, we're going to reassess and see what is the optimal capital structure for the company at that point in time. Obviously, there's going to be a number of considerations that we will need to look at when we get there.
Fair enough. I figure it's worth trying anyway. If I go back to this China discussion a bit, and Tim, I think your comments around growth in iPhones in mainland China is really notable. Could you step back? I mean, these numbers are still declining, at least Greater China on a year-over-year basis in aggregate. Maybe just talk about what are you seeing from a macro basis in China, and then at least the annual decline or year-over-year decline that we're seeing. Do you think it's more macro-driven or more competitive-driven over there? That would be helpful.
Yeah, I can only tell you what we're seeing, and so I don't want to present myself as a economist. So I'll steer clear of that. From what we saw was an acceleration from Q1, and it was driven by iPhone. And iPhone in mainland China, before we adjust for this 5 billion impact that we talked about earlier, we clearly have work there to do. I think it has been and is, through last quarter, the most competitive market in the world. And I wouldn't say anything other than that. I've said that before, and I believe that it was last quarter as well. And but if you step back from the 90-day cycle, what I see is a lot of people moving into the middle class. We try to serve customers very well there, and have a lot of happy customers, and you can kind of see that in the latest store opening over there. And so I continue to feel very optimistic.
Great, thank you.
Thanks, Amit. Operator, we'll take the next question, please.
Our next question is from David Vogt with UBS. Please go ahead.
Great. Thanks, guys, for taking my question. I'm going to roll the two together so you guys have them both. So, Luca, obviously I'm trying to parse through the outlook for the June quarter. And just based on the quick math, it looks like, all things being equal, given what you said, the iPhone business is going to be down mid-single digits again in the June quarter. And if that's the case, and maybe this is for Tim, obviously, how are you thinking about the competitive landscape in the context of what you just said, maybe outside of China? And what changes sort of, the consumer demand or receptivity to new devices? Because we've been in this malaise for a while. Is it really this AI initiative that a lot of companies are pursuing? And do you think that changes sort of the demand drivers going forward? Or is it just really more of a timing issue in terms of the replacement cycle is a little bit long in the tooth, and we see a bit of an upgrade cycle at some point, maybe later this year into next year? Thanks.
I do see a key opportunity, as I'd mentioned before, with generative AI, with all of our devices, or the vast majority of our devices. And so I think that if you look out, that's not within the next quarter or so, and we don't guide at the product level, but I'm extremely optimistic. And so that's kind of how I view it. In terms of I'll let Luca comment on the outlook portion of it. I think if you step back on iPhone, though, and you make this adjustment from the previous year, our Q2 results would be flattish on iPhone. And so that's how we performed in Q2.
Yeah, David, on the outlook, I'll only repeat what we said before, and this is the color that we're providing for the quarter. We do expect to grow in total, low single digits. We do expect services to grow double digits, and we expect iPad to grow double digits. For the rest, I'll let you make assumptions, and then we will report 3 months from now.
Great. Thanks, guys. I'll get back on the queue.
Thanks, David. Operator, we'll take the next question, please.
Our next question is from Samik Chatterjee with JP Morgan. Please go ahead.
Hi, thanks for taking my question, and I have a couple as well. Maybe for the first one, your services growth accelerated from 11% growth to 14. If you can sort of dig into the drivers of where or which parts of services did you really see that acceleration, and why it isn't a bit more sustainable as we think about the next quarter, because I believe you're guiding more to sort of averaging out the first half of the year for the next quarter. So just curious, what were the drivers and why not have it a bit more sustainably sort of improve as we go through the remainder of the year? I have a quick follow-up. Thank you.
So a number of things on services. First of all, the overall performance was very strong. As I said earlier, all-time records in both developed and emerging markets. So we see our services do well across the world. Records in many of our services categories. There are some categories that are growing very fast also because they are relatively smaller in the scheme of our services business, like cloud, video, payment services. Those all set all-time revenue records. So we feel very good about the progress that we're making in services. As we go forward, I'll just point out that if you look at our growth rates a year ago, they improved during the course of the fiscal year last year. So the comps for the services business become a bit more challenging as we go through the year. But in general, as I mentioned, we still expect to grow double digits in the June quarter at a rate that is very similar to what we've done in the first half.
Got it. Got it. And for my follow-up, if I can ask you more specifically about the India market, obviously you continue to make new records in terms of revenue in that market. How much of the momentum you're seeing would you associate with your sort of retail strategy in that market, retail expansion relative to maybe some of the supply change or the sort of manufacturing changes or strategy you've undergone or taken in that market itself? Any thoughts around that would be helpful.
Sure. We did grow strong double digit. And so we were very, very pleased with that. It was a new March quarter revenue record for us. As you know, I've said before, I see it as a incredibly exciting market, and it's a major focus for us. In terms of the operational side or supply chain side, we are producing there. From a pragmatic point of view, you need to produce there to be competitive. And so, yes, the two things are linked from that point of view. But we have both operational things going on, and we have go-to-market and initiatives going on. We just opened a couple of stores last year, as you know, and we see enormous opportunity there. We're continuing to expand our channels and also working on the developer ecosystem as well. And we've been very pleased that there's a rapidly growing base of developers there. And so we're working all of the entire ecosystem from developer to the market to operations, the whole thing. And I could not be more excited and enthusiastic about it.
Got it. Thank you. Thanks for the rip.
Yeah.
Thank you, Samik. Operator, we'll have the next question, please.
Our next question is from Aaron Rakers with Wells Fargo. Please go ahead.
Yeah, thanks for taking the questions, and I think I have to have two as well, like everybody else. I guess I'm going to go back to the China question. I guess at a high level, the simple question is, when we look at the data points that have been repeatedly reported throughout the course of this quarter, I'm curious, Tim, what are we missing? Like, where do you think people are missing, Apple's iPhone traction within the China market, just at a high level, given the data points that were reported throughout this course of the last quarter?
I can't address the data points. I can only address what our results are. And, you know, we did accelerate last quarter, and the iPhone grew in mainland China. So that's what the results were. I can't bridge to numbers we didn't come up with.
Okay. And then as a quick follow-up, I know you guys haven't talked about this, quantified it in quite some time, but I'm curious of how we would characterize the channel inventory dynamics for iPhone.
Sure. For the March quarter, we decreased channel inventory during the quarter. We usually decrease channel inventory during the Q2 timeframe, so that's not unusual. And we're very comfortable with the overall channel inventory.
Thank you.
Yeah.
Thank you, Aaron. Operator, we'll take the next question, please.
Our next question is from Richard Kramer with Arete Research. Please go ahead.
Thanks very much. I'm not going to ask about China, but you regularly call out all the rapid growth in many other emerging markets. So is Apple approaching a point where all those other emerging markets in aggregate might cross over to become larger than your current 70 billion Greater China segments? And maybe investors could look at that for driving growth for the wider business. And then I have a follow-up for Luca. Thanks.
I think, Richard, you're asking a really interesting question. We were looking at something similar recently. Obviously, China is by far the largest emerging market that we have. But when we start looking at places like India, like Saudi, like Mexico, Turkey, of course, Brazil and Mexico, and Indonesia, the numbers are getting large, and we're very happy because these are markets where our market share is low, the populations are large and growing, and our products are really making a lot of progress in those markets. The level of excitement for the brand is very high. Tim was in Southeast Asia recently, and the level of excitement is incredibly high. So it is very good for us, and certainly the numbers are getting larger all the time, and so the gap, as you compare it to the numbers in China, is reducing, and hopefully that trajectory continues for a long time.
Okay, and then as a follow-up, maybe for either of you, I mean, you're coming up on 4 years from what was an incredibly popular iPhone 12 cycle, and given you're struggling to reach your net neutral cash position, and your margins are at sort of near highs, do you see ways to deploy capital more to spur replacement demand in your installed base, either with greater device financing, more investment in marketing, more promotions? I mean, do you feel like you need to produce those sort of margins, or is it more important to spur growth with replacement? Thanks.
I think innovation spurs the upgrade cycle, and as one thing, of course, there's economic factors as well that play in there, and what kind of offerings there are from our carrier partners and so forth. And so there's a number of variables in there. But we work all of those, and we price our products for the value that we're delivering, and so that's how we look at it.
And if I can add to Tim's comments, Richard, one of the things that when you look over the long arc of time that maybe is not fully understood is that we've gone through a long period of very strong dollar. And what that means, given that our company sells more than 60% of our revenue is outside the United States, the demand for our products in those markets is stronger than the results that we report, just because of the translation of those local currencies into dollars, right? And so that is something to keep in mind as you look at our results, right? And so we are making all the investments that are needed. And Tim has talked about innovation. Obviously, we made a lot of progress with financing solutions, with trading programs, and so on. And we will continue to make all those investments.
Okay, super. Thanks, guys.
Thank you, Richard. Operator, can we take our last question, please?
Our next question is from Atif Malik with Citi. Please go ahead.
Hi, thank you for taking my questions. I have two questions as well. First, for Tim, for enterprise specifically, what are some of the top 2 or 3 use cases on Vision Pro you're hearing most excitement? And then I have a follow-up for Luca.
The great thing is I'm hearing about so many of them. I wouldn't say that one has emerged as the top right now. The most impressive thing is that similar to the way people use a Mac, you use it for everything. People are using it for many different things in enterprise, and that varies from field service to training to healthcare related things like preparing a doctor for pre-op surgery or advanced imaging. And so it's commands, control centers. And so it's an enormous number of different verticals. And, our focus is growing that ecosystem and getting more apps and more enterprises engaged. And the event that we had recently, I can't overstate the enthusiasm in the room. It was extraordinary. And so we're off to a good start, I think, with enterprise.
Great. And then, Luca, I believe you mentioned that for the March quarter, the commodity pricing environment was favorable. Can you talk about what you're assuming for commodity pricing on memory, et cetera, for the June quarter and maybe for the full year?
Yes, we provide guidance just for the current quarter. So I'll tell you about the guidance. We're guiding to a very high level of gross margins, 45.5% to 46.5%. Within that guidance, we expect memory to be a slight headwind, and not a very large one, but a slight headwind. And the same applies for foreign exchange. Foreign exchange will have a negative impact sequentially of about 30 basis points.
Thank you.
Thank you, Atif. A replay of today's call will be.
All right, and there we are. That is their fiscal year Q2, but their Q1 Apple earnings call was an interesting one there. There's a lot of conversation. The stock kind of went sideways, give or take, during that call, so not too much movement to talk about there. There was some hype around their AI events, events that they have coming up where they should be having some AI announcements. Tim Cook kept saying weeks, as in I took that as this. We should expect this sooner rather than later. So later, I said that weird. So I'm excited about that. Every single question it felt like was either about AI or China, and I think we kind of knew that was going to happen coming into this. But solid call overall. I mean, I don't know too much that kind of came out of that we weren't expecting. Tim Cook did talk a little bit about, Luca Maestri did a little bit about forward guidance. We got feels. Kind of about total revenue coming in at up low single digits percentage year over year. Services revenue up double digits percentage year over year. I think that's a pretty key area that we want to see growing. And then he also threw an iPad revenue specifically for some reason. But hearing about total revenue and services still being up year over year. Next quarter should be nice. We'll see. Market didn't really move, like I said, too much off of anything we got in there. There was a little bit of a drop down right when the call started, but after that, give or take, sideways from there. Mr. Stock Talk Weekly, we'll go to you first, and then Kevin, and then go from there. You have any thoughts from that earnings call?
Yeah, I mean, I think you did a decent job. this AI thing is going to be complicated from Apple's perspective because, we saw a lot of AI questions there, obviously, but Tim seems to not want to, and this isn't atypical. He's always kind of been like this. Apple's always been like this in general, where they don't want to get ahead of the product announcements and kind of cue people into them, on the earnings call or in any other sort of presentation format. So it's clear that they're working on something. I just don't know what that something is. But like you said, we should find out pretty soon. So on the AI front, it's kind of still a question mark. We don't know what their initial product is going to be, and we don't know how they intend to leverage that. He did get a couple questions about China as well. I thought he kind of beat around the bush there. He kept reiterating that quarter over quarter, they did see an acceleration, and he kind of wanted to hang his hat on that point, or at least he seemingly did, because then when he got the follow-up question about China, he said the same thing. But he avoided kind of extrapolating on the second question, which was the idea of, is this more of a macro headwind in China, or is it a competitive headwind in China? My feeling personally is that it's the latter. I think it's a competitive headwind. Now, is there a little bit of geopolitical juice thrown on top of that in terms of the U.S.-China relations? Sure. Yeah, I think that is also playing a role to an extent. But broadly speaking, I'm not sure he gave a great answer to what their strategy is to address rising competitive concerns internationally. He frankly didn't even address that at all specifically, and kind of turned the road around it. So we'll see. That part was a little disappointing to me. Again, I do think genuinely, and this is outside of the positive reaction and obviously the stock buyback, I genuinely do think Apple has iPhone market share concerns. I think they are here. I don't think they're coming. I think they're here. I think these sort of year-over-year drop-offs in international revenue show you that competition is getting more robust internationally, and Apple's going to have to have a strategy to address that. I'm sure they do. Maybe he didn't expound on it well enough in the call, but I'm sure they have a strategy. I'm sure they're making moves to try to address that bleed. But yeah, that's kind of my overall view. I thought that the AI commentary was interesting, kind of still a question mark there, and I didn't love the way that he addressed the regional headwinds. On the positive side, I think they are doing a good job of kind of forecasting the idea of further business efficiencies, especially in service. I think they're trying to make the argument to the street, or at least portray to the street, that they have ways to drive upside in the business profile without, not only without the international markets, but without maybe meaningful recovery in some of the international markets. So that was positive. And also the India growth commentary was positive too. The idea that they're putting more focus there. So I think there are a couple positives, couple concerns, but the stock is up and seems to be reacting well. We'll see if that can hold into tomorrow.
Kevin, you've been on a little bit of the. We just had some good discussions here and debates, and you tend to be on the opposite side of stock talk on a couple of the Apple ones, and we've been on the right side of it. We don't have to get that part in there. But how did you feel about that earnings call? Any thoughts coming out of it?
I think he did exactly what he needed to do. Kind of like with stock talk, and I'm going to give Tim a little bit of an out here. I think his comments were also more geopolitical, right? Like he can't come out on a conference call, especially the dynamics that are happening in China right now, and come out and say that the macro environment in China is bad, right? when he needs that market, and he was just out there. So I think he would rather kind of play it down. Yeah, the competition's, getting a little bit tougher than what we thought, but I think he wanted to go away from actually commenting on the China economy because of potentially maybe the fear and the repercussions that could come with that from a policy standpoint. Like, I truly believe that was the case. If you can kind of even hear his tone and the way that he was kind of stuttering through it, it kind of, and I hate saying it like this, but it was like, kind of felt like he was held hostage there for a second, right? Like, comment on China, buddy. Like, we know that there's other problems that are going on. Is it just specifically with you, or is there a broader thing? And he kind of tried to downplay the macro environment, which I think he could have attributed some of the lack of sales due to that. Look, I think when you kind of talk about the AI front and his, him talking about weeks, I don't think it's a surprise, right? They have a conference in the next week or two. I don't think that's a surprise. I also picked up on the fact that he said generative AI can be a part of across multiple products that we offer, right? But he doesn't want to get ahead of any type of an announcement. Well, we talked about this yesterday. I don't think that you're going to see the AI breakthrough from Apple by utilizing a new hardware product. I think they're going to iterate it over the existing products, and I think that that's what their strategy is going to be moving forward. I don't think they're going to have a new thing just for AI to kind of get them out of this pseudo slump that people have this perception of. So that's what I'm looking forward to. I think it's going to be more software driven rather than any type of hardware, to say the least. And then the iPad revenue forecast, like, who cares?
Yeah.
That was kind of weird. It's like you provide just one product segment. It's like one of the ones that no one really cares about, but it's probably the one that they have the most visibility in right now. So I understand it, but I thought that was kind of hilarious. Outside of that, I think he did exactly what he had to do. I mean, any of the tough questions, people try to hammer him on China. He wanted to be very tight-lipped about that. I get it from a strategic standpoint, even though as an investor, people want to have more and get more of the nitty-gritty. But once again, I think he was shying away from the China discussion, not only because of maybe some of the competition fears, definitely, but I don't think he wanted to make any type of broad comment around China's macro environment right now, just based on, if you kind of look at it, Apple's kind of hanging by a thread, and they, now, let me say this in the right way, because that came out completely wrong. Apple could be the biggest target for China for any type of retaliation that would have a direct impact on the United States and its economy. And Tim Cook knows that, and China knows that, and the U.S. knows that. So he has to walk a tightrope. That's why I kind of give him the benefit of the doubt with the statement there. But outside of that, great report. Look, the buyback, a very aggressive buyback. Right. And we have to just kind of remember, and maybe for those that don't understand what a buyback is, right, they're taking shares out of the open market. So they're basically reducing the amount of shares that are out there in the market. And when they are doing that, when they report their financials, it actually synthetically improves their business. Like, let's call a spade here. They're able to do that. They have enough capital to do it, but that's also going to be a benefit for them. So yes, they could see sequential, flattening when it comes to revenues and all of that. But if they continue to take a significant amount of shares off the market, their EPS growth is still going to be there because of just how it's calculated, right? So we have to just kind of keep that in mind. It's a financial engineering type of mechanism that, one, does show strength. Maybe it does appear that your stock's a little bit too cheap and you want to buy it up, but it's also a way for you to be able to pad the stats if you had the capital in order to do so. And Evan, I know you laughed about it when they said, will you start issuing or basically leveraging debt to continue to increase your buyback program? And they basically said, no, that's not what we're going to be doing, because once you start using debt in order to do your buybacks, that's when you kind of enter a little bit of a slippery slope, especially if you're utilizing that debt and you're not able to pay it back in the fashion that you want to because of economic headwinds or what have you. So those are my broader thoughts about it. Let's see if the stock continues to keep this move right now, and I think we kind of move forward. It provided a 25-point bump in the E-mini S&P futures. Let's see if that's going to be able to maintain and create some momentum across the board, especially in the technology space.
I absolutely hate the idea of any company that takes out debt to pay a dividend or pay some sort of share buyback. There can be some weird situations where, hey, we know we're going to get this return if we do it. And through the debt, we're at such a low interest rate, especially back when we're at the 0% landscape, that there's ways that it could make sense. But just from a top level of things, there's a couple companies out there that it always scares me when they're taking on debt to pay out their dividend. My thought process goes, come on. I know it might hurt in the short term. Cut that dividend. Let's turn this company around and let's get it to a point where we have that sustainable dividend. I think it's a mistake to take on some debt. So I was happy to hear that answer. And that's what I would expect. I mean, this is a company who's they're having trouble getting from. They're making so much money that they're having trouble getting down to free cash flow neutral. That they can't invest in the different areas quick enough. So I think it also goes back to that Apple Car project R&D. That listen, at this point in time, it's wasted money. But what's $10 billion to a company like Apple who's struggling to get to free cash flow neutral? So I don't want to see them light any money on fire or anything like that. But take these risks to with some of that intense amount of cash flow you're bringing in, try some R&D things and see what sticks is a strategy that I'm kind of happy with. But yeah, if they would have answered yes to that question, I would have been second guessing life a little bit over here, Kevin. So China and AI were the two big ones. I thought it was funny that we got a little bit of a Vision Pro question at the end, and I won't lie. When you say there's too many stuff for you to even think of one, I feel like that might mean you can't think of one. But we'll let that one go. I won't harp too much into it. But yeah, it was an interesting answer to the Vision Pro question at the end. But the market really doesn't care about the Vision Pro at all at this point. I think their more thought process is how much money are you spending in that arena, and is it too much, as we've seen with Meta's Reality Labs segment. So overall, though, I thought it was pretty decent numbers. I was excited by that call. I was excited by everything I've heard. Again, I'm an Apple fanboy. I'm biased in their favor, so it would have taken some negative headlines for me to move that way. But sounds like I should be excited for the next couple weeks going forward with some big AI announcements. I would imagine one of those is going to be the confirmation of whatever partnership they have with OpenAI or Google. But what's up, Kevin?
Yeah, just be mindful too for those that are looking to trade this name. Like, do your research on how the stock actually performs pre-event and post-event. It's usually buy the rumor, sell the news. So just keep that in mind. We probably will continue to see a ramp up until this event is actually occurring. And usually when they do announce something, it's just the mechanics. We just see the stock sell off, and it's not an aggressive sell off, but usually post-move is not a positive move in the immediate aftermath of an event. So just go back, do your homework. I mean, there's a lot of research that's done on this as well, so you can look at some papers that go over it, but it's just one thing to be mindful of, AI related or not, right? And maybe this might be different. Everything can be different this time. AI or not, I would say there's probably going to be more of a build up to the event rather than the surprise at the event, especially if it's going to be software driven.
For sure, that has definitely been Apple's MO over the last little bit. It gets talked about every single time, so we'll see. We'll see how that changes.
Well, I think one point is worth making, and Evan's going to like hearing this because you don't like hearing anything positive about Apple. But one point is worth making is that Tim Cook highlighted this as a competitive advantage, and I think it's probably the best thing he said on the call, outside of obviously the business-related stuff. But he said that he believes that Apple has a deployment advantage when it comes to artificial intelligence products, and that is absolutely true. In fact, that is Apple's greatest advantage over its megatech peers. When you look at software-focused companies like Microsoft and Google, and the way that they are delving into the AI space, it is mostly software focused, and initially it was software focused on the consumer end. If you want to look at OpenAI's products like ChatGPT, or you want to look at Google's search engine related products, those are consumer focused products, right? But under the surface, there's an expectation that both Google and Microsoft will deploy enterprise related products that have extremely high pricing power in the AI space. That's where the forward looking optimism is. But with Apple, I think that the consumer-facing side is still a little bit overlooked, because if they do deploy a really good LLM, and not even just an LLM, any kind of consumer-facing AI product, if they deploy a good version of that initially, they have billions of deployed devices that can instantly be improved, not only in their own functionality by that software, but the idea of presenting that software to your consumer base is almost instantaneous. So I do actually agree with Tim Cook that is a competitive advantage for Apple, and that's why I've kept the door open here. Like, whenever they do announce their product, my view on Apple could definitely change. especially if that product is instantly deployed to over 1 billion devices. So, yeah, I mean, that was a bright spot. And I think Tim did a good job of emphasizing that. And that's important to keep in mind going forward because their competitors, and when I say they're competitors, I really mean they're the other mega tech peers, the other Mag 7 peers. Those names don't really have that same advantage. They are, some of them have hardware parts of their business, but I mean, it's not the core portion of their business the way that Apple is. And yeah, that is a flat out deployment advantage. So will Apple leverage that effectively? That remains to be seen. But again, if the product is good, I think that will end up being a big tailwind.
Definitely a lot to be keeping our eyes on. All right. I think that does us pretty well for the spaces here, talking about Apple. Obviously, stock up, so I'm happy. But we do also have a couple data points that we should be keeping an eye on tomorrow. Obviously, we have the NFP, non-farm payroll, will give us some information there. There will be data on wages, how much those are increasing. There will be data on hours worked. There will be data on labor force participation rate and unemployment rate and all that stuff. And tomorrow morning, definitely, the truth is, and I don't want to speak this too far into existence, if we get a negative report there, Apple could just be open up flat and, oh well, here we are tomorrow. But we do have that NFP data coming out tomorrow morning. Kevin, I know we'll be live for that one and everyone should join it. Actually, first of all, if you've enjoyed this Spaces, you should make sure you're following the speakers. They're all fantastic. Once the Spaces ends, you'll see a recording link with all the speakers who are up here, and just go in and check them out and give each and every single one of them a follow. Shout out Kevin for still being up here with us. And if you enjoy these type of live free conversations, make sure you're following the host of this account as well. We're live every single Monday through Thursday, 3 to 5 p.m. Eastern at least. But yeah, NFP tomorrow morning, Kevin. I know this is one thing that you like to focus on. We'll obviously be live on Spaces together for that one. Everyone else is invited to come join us. But Kevin, any kind of quick thoughts here on what you're watching for tomorrow morning and the importance of it?
Yeah, I think it'll be a little bit important. I think the market would rather have a strong print on jobs than a weak one. I think the days of hoping the job market cracks might be on pause here for a little bit, because you don't want to have a weakening job market with inflation moving to the upside, right? That's where they start talking about stagflation. So I'm not by my desk, so I don't know what the number is. I think it was like 240,000, 243, something like that. I don't know. Yeah, I think we should have hopefully have a lot harder, or a better print, if you will, than the street's expectations. I think the market will take that well. I do believe that there is actually a pretty significant amount of risk that average hourly earnings comes in really hot tomorrow, and that might spook the market. But I mean, we've had a lot of hot inflationary data points over the last week, and some of it has moved the market to the downside, and some of it has been ignored. But I think the trend is definitely going to be there, and I just would say just brace for a hot average hourly earning print. I'm not sure if that's going to overshadow what we add for jobs, knowing that we have a pseudo Fed put that is literally now in play. I mean, that's pretty much what Powell just talked about the other day. Fed put's definitely out there. It's a matter of when and not if at this point in time. But I think that could be a number that actually probably catches a little bit more attention than the amount of jobs that are being added.
On the jobs comment you just made, I think that's a great point, actually, about wanting to, this idea of where the market expectations are for, whether they want a good or a bad print on jobs, knowing that we haven't got the next inflation reading yet to verify if the disinflationary trend resumes or whatever the case may be. Do you think we want a strong print, or do you think we want an incrementally weak print? Like a slightly weak print where it's like, hey, the job market may or may not favor a cut in the near future, but not a panic-inducing print. You know what I mean?
No, I think the market would rather have a strong print. So, all right, so if you're talking about it from a trading standpoint, right, and you look at the flash headline number that comes out there, and if that's all that you care about, then yeah, you want to see something that's in line or incrementally a little bit lower, right? If you're a trader and all you care about is the flash print, if you're talking about more from an economic standpoint, right, the macro side of it, I would rather see a little bit of a hotter print. And here's the reason why. A lot of the growth that we have seen over the last 6 months has been all part-time work. And part-time work has really been carrying us. And then it's also coming from mid-sized businesses and small businesses. Actually, the companies that are really employing a lot of people right now are companies that have 250 employees or less. It's not the big names. Obviously, we just hear about layoffs all the time. So I would think that you want to actually continue to see that strength, because then that also gives you a little bit more credence that the small business and mid-sized businesses are still seeing a fair amount of demand and have a need to hire. There will be a bifurcation at some point where initial claims on a weekly basis will actually diverge from the monthly jobless claims or the monthly job ads that we do have. There will be a bifurcation at some point in time. And unfortunately, once you start getting the cracks in the labor market on the monthly jobs number, that crack takes a very long time to really to stop that snowball, to say the least, right? So I'd rather not even see that snowball start, and I'd rather see us really just fix the inflationary problems at the core, if you will, or at least flatten it out, rather than seeing a situation where job market starts to crack and you're also seeing a rising inflationary environment. Because, guys, like the employment cost index, like that's huge. Like that was a significant beat to the upside. We had ISM prices paid, significant beat to the upside. We had some data points earlier, even today, where it was just like, you don't want to see it. I think it was the labor cost index or something like that. Like you don't want to see that data point and then also jobs go into the downside. Because once we start losing jobs, it's just a domino effect. And if we're losing, part-time jobs are the easiest ones to not offer, right? Those are the easiest ones that you can pull off and say, oh, look, we're not gonna need this part-time employee. Instead of having these two part-time jobs or three part-time jobs, we'll just add one full-time. That actually has a major impact when it comes to the amount of jobs that are being reported, that are being added. And that's what we're kind of seeing, right? And so I would rather see either us meeting the expectations or exceeding them, rather than us seeing any type of weakness, especially with everybody kind of on edge on the inflationary front. That's my 2 cents, right? Other people might say, look, I'd rather see the weakness now, accelerate the rate cut environment. But just because you cut rates, and when we cut rates is not when you're going to stem job losses. You're not going to stem that for another 12 months to 16 months. And I think people kind of got to recognize it's not going to be like an overnight thing. It's not like trying to save the housing market, right? Like it's not trying to stimulate demand in certain goods or products. Like the job market and the labor market, especially in this AI environment, which a lot of these companies are just starting to implement. You can see it in the challenges report today. They actually have a line item on the challenges report right now for jobs lost related to AI. We had 800 jobs lost related to AI last month, right? So that's kind of my 2 cents. If you're a trader and all you care about is flipping some trade, then yeah, I mean, like maybe you see a weak print, you might get some algos that say, perfect, this is what we want. You pop the market to the upside. But I think over the long term, that's not a good sign for us to be able to provide stability in the equity market. That's just my 2 cents. And everybody has a different opinion about that. I am in a jet though, guys. I appreciate you. Thank you so much, Evan. I'll see you guys tomorrow, and looking forward to seeing if Apple can hold these gains.
Looking forward to watching Apple hold these gains. I'll correct what you're saying. No, I'm kidding. But definitely, Kevin, appreciate you as always. Everyone should be checking him out, giving him a follow. And like I was talking about there, we're going to be live tomorrow morning, getting those NFP numbers and all that data out the second it's there. Everyone is invited as always. Stock Talk's going to make some claim that he's busy in the mornings reading reports, but then he's also going to say that ChatGPT does everything for him. So which is it? I think you're just avoiding us. But yeah, I think that I'm just kidding there, by the way. Maybe I need to tell you guys, I like to talk shit to people that I enjoy being with, and yeah, so level of comfortability, struggled to say the word there, that I could talk shit to someone. So I will say that there's different levels. But yeah, I'm rambling here. Appreciate everyone. Stock Talk. Wolf, I don't know if you have any final comments here you want to get in.
Nope, we'll see you guys next week. Same time, same place.
All right. Back to focusing specifically on this live stream. Ooh. Just had a little bit of error. Hopefully this is still working. But I appreciate each and every single one of you guys for constantly joining in on these spaces and this live stream and helping everything I'm doing. I'm really trying to level some games up and see what we can do. So if you enjoyed this spaces, damn, I keep saying spaces. If you enjoyed this live stream here on YouTube, make sure you're subscribed to the channel. It actually had some pretty decent uptake during it. We got up to like 80, 90 viewers during it. Probably had a good amount of watch hours in here as well. So I'm very happy with how this went. I appreciate each and every single one of you for, making what I do possible as my computer starts to lag out here. So we'll see how this continues. Hopefully I can even end this stream here at this point. But yeah, I hope you guys all have a fantastic day. I hope you guys all have a fantastic day. I hope if you're an Apple Bull, I hope we're all Apple Bulls in here. But yeah, appreciate everyone. I'm gonna end the spaces here, end this live stream here. I'll catch you all tomorrow morning. It should be live on the YouTubes again at 8:15 a.m. Eastern, and we'll cover that NFP print. So if you're still in here, make sure you're subscribed to see that on your timeline. And as my computer lags out here, I am gonna try and end the stream. Let's see how